Welcome to the Untrapped Podcast, where we're motivated and inspired about success, small business, and personal development. And now, Keith Kalfas.
What's up, guys? This is Keith Kalfas with the Untrapped Podcast. We got my boy Dan Platta all the way in from Minnesota, the home service CFO. This guy changed and impacted my life in so many ways, and we're going to get into tons of stuff. He's going to talk about scaling your business. You're going to want to take notes because this basically free content on the Untrapped Podcast and on this video, if you're watching the video, is stuff. The last time he was here, people emailed me saying, bro, I watched it, and I'll put a link in the description below and in the show notes to the 12 steps that he did. But people were literally taking notes. When Dan comes on the show, he's just dropping what we call knowledge bombs, pure value. And I want to say, who is this guy if you don't know him? We went to his house in Minnesota. My wife and I, we brought a couple of our dogs. We were traveling around and going to the Dirt Monkey's house. So we stopped at Dan's because his agency does our bookkeeping. And I met Dan through a series of people in our industry. He's a great guy, but my dog left a dog toy in his backyard. And I'm saying this again. We left, and we're like, oh, shoot, Miko left his dog toy in Dan's backyard. Now we're already passing through Chicago. And I texted him, you texted me. I'm like, dude, don't worry. It's just a dog toy. Bro, a week later, I look in the mail, and the dog toy showed up in the mail. You mailed my dog toy.
Dude, I got I don't have any dogs, but I have 3 kids, and if food gets spilled around the table, they'll eat it off the floor, so they're basically like a dog. And, man, if a toy is missing, we got thousands of toys, but if one of them's missing, I'm going to know about it, right? I respect the toy. You got to respect the toy. You got to respect the dog. Dog needs his toy. The dog had a toy. This is a Michigan dog. It was in Minnesota.
Yeah.
The only toy that comes with a dog to Minnesota is a meaningful toy. It wasn't just any toy. It was the travel toy. Like, that dog clearly appreciated that specific toy. You can't take a toy away from a dog like that. Had to get back home.
Dude, you went to the mill and you mailed all the way back. No, what I'm talking about is integrity here. So, dude, let's get into it. You brought a notebook. You put together notes for this and things that you've wanted to talk about since last time you were here on the show.
I'm a nerd, man. I've been saving them up for like a year and a half. Just like taking my notes. Got to go back and talk some nerdy stuff.
Dan and his he's serial entrepreneur. He's either started from the bottom and grown several multiple 6 and several 7-figure businesses. He's a finance genius, and he helped me take my QuickBooks and my understanding of finances in my business and all the little tiny questions I had that were making me feel confused as far as the money aspect of, you know how much is coming in and how much is going out, and you know how much is in your bank relatively, but Dan helped me dial it in, and a lot of other people on a whole new level. So sit back, buckle up your seatbelts, or if you're out working, listen to this thoroughly. I'm going to let you take the floor. What's up, Dan?
Man, it's so good to be back. It's just good to be sitting in here, hanging out. I'm always like, I'll call them toys. They're not toys. You have all these assets. That's me being a finance person. You got all these assets to do this sort of thing. It just blows my mind, man. You kill it at this.
The so cameras cool. And the lights. And
just being in this room. When I do my little home service happy hour podcast, I'm just like at my little laptop with the, what I deem as a nice, like microphone that I bought from Amazon and whatever camera I got, and I just send it. And I come in here, I'm just like, man, I'm just such an amateur on my podcast. Keith just takes it to another level.
I had a dream of making this podcast, what it is now, what it's growing into. And it soon be. There's going to be people flying from around the country to be on this podcast because the quality of the show and the presentation is. But it's hard to run a full-time service business and do a podcast and all this stuff too. Anybody who's, my hat goes off. I look at the people that do this. It's a lot of work, and you do it too. You've got your podcast.
Nuts, man.
What is it?
Home Service Happy Hour is the new podcast that I started. So I've got, last time I was here, I was with Blue Sky Services doing bookkeeping, had the Bookkeeping Beer and BS podcast. We had a bunch of different businesses around the country. And I'm no longer at Blue Skies, and I'm no longer doing Bookkeeping Beer and BS. I'm still doing bookkeeping. I have a new company called Best Damn Bookkeeping, super Danified, just total Platta, badass name. It had to be
Best Damn Bookkeeping.
Best Damn Bookkeeping, and if you don't like the swears, I also own the domain for Best Dan Bookkeeping because a lot of people are like, wait, is it Best Damn or Best Dan? And I'm like, yeah, Both. You get both of them, whichever one you want. You get both of them. But I'm super passionate about the finance stuff. I'll get into a little bit about why I split off and started a new entity with it, and along with that, started a new podcast. One of the things that I appreciate, and I appreciated this about your podcast forever, and I think I told you this last time I was here, when I first started in the home service space, and I'm not alone in this. Like, if there is a person that's starting in the home service space, there's a really good chance they got started because they heard something from Keith Kelfus. And I'm no different. Like, when I first started, you're the first name I heard. Like, oh, you got to watch this video from Keith. Like, this will give you some context about what the hell you're getting into. So I remember just starting way back in the day. That was what it was. It was watching this video from Keith Kelfus talking about starting a new business and this and that. And man, it's just like that was 10 years ago, and not a whole lot's changed, but our industries have matured so much, and so many people have such higher goals to get to, myself included, right? And so part of starting the new podcast, part of starting the new business was all about just being able to go out and do it on my own and like take it to another level. One of the things I realized with podcasting, and again, back to even like watching your original content, it's cool to have a good educational podcast, but if it's boring and it doesn't deliver a message in a fun and exciting way, and it's not edgy, nobody's going to watch it. If you're just sitting here giving like super nerdy bullet points and you're boring to listen to, or you don't have a cool way to deliver it, I don't care how good the bullet points are, ain't nobody going to listen. You got to keep people's attention. It doesn't matter if you're up on stage presenting. It doesn't matter if you're a podcast host. And that was one of the things I always appreciated about you is like when you're podcasting, you're going. And once I start listening to you, you can't put it down because you're passionate, you're excited, your volume's changing, right? You've got that energy. And so part of the reason I started the home service happy hour, I mean, I'm a beer drinking nerd from Wisconsin. Like, that's just me. A mentor of mine named Keith Kelfus once told me, be yourself and turn the microphone all the way up.
And I got that from Stan Genetic to Dirt Monkey. He said, be yourself with the volume turned all the way up.
And you passed it along to me. And so I was like, man, I like home service happy hour is where it's at. It's a business entertainment podcast. It's got to be loud. It's got to be funny. And I'm going to be drinking beer every time I do an episode. And I'm going to teach some stuff and we're going to have some fun business chatter. But it's meant to replicate the convo that you would have with another business owner sitting at a bar drinking a beer. Like, that is the podcast. It's the Joe Rogan experience version of a business podcast. We should be hanging out, talking nerdy business stuff, having a beer, which is my favorite thing in the world to do. I almost brought a beer in here just because I was thirsty.
You should have.
I got this water, though. But I also started my new business, and I can get into that a little bit. I was at Blue Skies for a long time. A bunch of people still, like, every time I'm like, I started my new bookkeeping business, they're like, wait, I thought Blue Skies was yours. And I'm like, kind of was, but our bookkeeping business there was like our 10th business. It was an accident. We didn't start Blue Skies to be a bookkeeping company. Blue Skies was a shitty little window cleaning business we bought back in 2011. It was Mike Dalkey was the CEO at that time, and my buddies Brian and Corey Weber were the other business partners in it. They still are. And the three of them were buying window cleaning and pressure washing and maid service companies. And like, I came in kind of fourth wheel and started buying some shares with them and eventually took over as CEO to run it. At the time, we didn't have a bookkeeping business. We didn't have a recruiting company. We had maid service companies and window cleaning companies around the country. Boom. So we had all these operating companies. The bookkeeping business was only a thing we did for ourselves. It was an internal business. We started it to take administrative employees and put them on a different payroll so they wouldn't be covered by insurance from all of our operating companies because the workers' comp and the general liability was so much more for those other businesses. So we wanted to take our admin people and move them to a different entity where we could get cheaper insurance for them. That was like the original, oh God, we should like move them over. So we started an admin company. I want to say it started in 2014. We didn't bring on an external client until 2018. 2018 was when we were like, oh, we built something that everybody else needs. We're just selfish assholes, and we're only doing it for ourselves.
Wow! So you started a bookkeeping agency internally to manage your businesses.
Yeah, we had 10 different companies across the country, and so we're like, well, we got to be able to measure all of our stuff, right? we have Hire Lead Chill now, which is I'll get to that. It's a separate business.
How brilliant. Okay.
The administrative stuff behind the scenes, because we had all these different locations across the country, whether it was bookkeeping, recruiting, marketing, phone answering, like a Jill's office, we did all that internally. We had a team of administrative people, and they served all of our external businesses. I came on board fully in 2016, left my corporate gig. 2018 was when we took on our first external client. So it was this like accidental business. Even when we took on that first external client, if I remember the first two we had, one was on recruiting, one was on bookkeeping. They were both from my buddy and business partner, Mike Dalkey, doing other investments. He started a commercial window cleaning business in Nashville, Right Hand Rhino. I think he still has it. Our buddy Gabe Torres runs it. And they needed to hire some subcontractors, and they're like, hey, we hire a bunch of people at Blue Skies. Can you guys run some ads for us? And all of a sudden, like by accident, we had a recruiting business. We were starting to run ads for other people. And similarly, he was looking at a window cleaning and pressure washing business down in Florida and was going to do an investment there. And he got a hold of their QuickBooks and was like, Platta, look at these. Like, what is this business worth? And I was just like, dude, I don't know that we could tell what this business is worth because it's such a disaster, right? Because part of your bookkeeping, part of the point of doing bookkeeping is if you're going to exit or bring on a partner, you can value your business. What's it worth? And obviously it's worth more if you can have a good scorecard and tell people what's happening in it. If you have a disaster of finances, nobody really knows what it's worth. So they brought me in when Dalkey was looking at making that investment. I kind of got brought in from a Blue Skies perspective to actually like clean it up, figure out how much that business was making because they couldn't tell. And that was our first bookkeeping client, was literally a cleanup job so that Dalkey and some other people could make an investment in that business. And so fast forward, all of a sudden we had over 100 recruiting clients and 300 some bookkeeping clients. And it was an accidental business. It was never intended to be this big external facing business. It was just we helped one person, and then we helped another person, and then we kept helping people, and all of a sudden it became its own animal. And at the same time, we realized having 10 plus home service companies across the country, that was a terrible strategy. It was pretty miserable running all those locations. And so we slowly sold those, shut those down, exited those, and all of our eggs were really in the bookkeeping and the recruiting basket. And that was at the point where I was like, oh crap, I grew something, kind of my baby. Like, again, people would be like, oh yeah, Dan, he owns Blue Skies, right? But I only ever owned 13% of it because I bought into it as a part of this holding company of all the things that we had. And I kind of got to this point where I was like, oh crap, I don't even own my baby. I built this thing, but I don't own it. And it's no detriment to the other three partners that I have. They're awesome dudes. Just in hindsight, I was like, I should have started this thing as like an isolated business of Dan doing nerdy finance stuff, which in fact, in reflection, I want to say it was like 2012 or 2013. Like Dalkey and I used to live a mile apart, and we would go to the coffee shops. To our wife's dismay, we would go to Starbucks. In Minnesota, it's Caribou. I don't know if they have the Caribou coffee here, so I say
Caribou coffee. Yeah,
I say Starbucks because everywhere else in the country they wouldn't know what Caribou is, but in the Midwest we got Caribou. There's Caribou by our house, and we'd meet there, and we'd be there for like 2 or 3 hours on a weeknight drinking coffee, which then you'd end up staying up till like 1 a.m. But we were solving all the world's problems and building spreadsheets and coming up with business models and doing acquisitions and stuff like that. And that was how I got first brought in. Was I literally was helping Mike with the books of all these businesses. So in hindsight, I'm just like, man, if I just was smart enough to realize like that was the path I should have went down right away. Like that was literally my entry into the home service space, was helping Mike get his books right and doing this multiple location strategy. And then, I CEO'd for Blue Skies for a long time and eventually came back to like, oh shit, I should be helping everybody with their bookkeeping. So long story short, I ended up exiting Blue Skies. We looked at it as a partnership, right? The four of us had to decide, does it make more sense for me to buy it or for them to buy me out? And it didn't make sense for me to buy it. I was not the best buyer. And we looked at it together where it was like, here's how much it makes sense for Dan to pay. and it does not make sense for those guys to sell it to me at that rate. So it was kind of a goofy, like, there were no hard feelings, but it was just a very mathematical discussion about how do we exit Dan so Dan can go do his own thing. And is it better for Dan to buy the thing, or is it better for them to buy Dan out of the thing? And it just ended up being that it made more sense for everybody for them to buy me out of the thing, which it felt weird, like growing a thing to be in a $1 million+ business and then having to give up that thing. And the hardest part was actually the people side of it. We got 20 employees at Blue Skies, and that's like, they're my people. It's like the business that I built. They're my folks. I'm super loyal to them, so that was probably the hardest part. And it was a 3-month deal over the summer of trying to figure out how to do that, it is definitely a goal for both Mike and I of like, how do we get this done and still like each other, right? Like, dissolving partnerships would be like exiting a marriage. It doesn't end well usually. Like, how do you exit that thing and still like hug each other when you see each other after you break apart?
I would think that if you go all the way upstream, the foundation is friendship.
Mm-hmm.
True friendship is when you can go through bumpy stuff and stuff. Like my friend William, the tree guy with the beard, I always talk about him. He's in my videos. He said something to me amazing on the phone last week. He's like, bro, I think we've already been through all that stuff over the past 15 years. Like, we know that because we've been through our little stuff, and now it's like, so anyways, I was just thinking about that.
It was, like, thank God that Mike's who he is, and Brian and Corey are their two partners. Like, I had the best freaking business partners in the world. It could have been ugly, right? Like, trying to exit that sort of thing. But, and it was still, it was difficult. It's probably the hardest thing I've done, because it's like, well, there's the math side of it, and then there's the relationship side of it, and they both tell you to do different things. Like, they're at odds against each other, right? Which, that's what business is. You're always you're doing trade-off decisions all the time, which is why bookkeeping is so important. We'll get to that. But so come September, we officially were able to like finalize the deal and exit me. So now that freed me up, because I couldn't start a new bookkeeping company. Like, legally, I couldn't start my own bookkeeping business while I still owned one. It's like, I have a fiduciary responsibility to not compete with myself. And so the only opportunity was I either had to buy them or they had to buy me. There was no other option. And so thankfully they agreed that they'd be willing to buy me out, and we'd figure that out. So that was like just a breath of fresh air to start over again. And obviously it's super frustrating to have to rebuild something, right? Whether it's like physically you're building, I go back to like being a kid. I have 3 kids, so I watch this happen all the time because we have a 7, a 5, and a 1. And the 1-year-old's only job in life right now is to break his sister's shit. When they build something cool, right? Like, that's what little kids do. Like, little siblings, their job in life is be like, oh, you built that? Sweet. I'm going to come and break it. I'm going to come and knock that over, right? And if you're that older sibling, you're just like, oh, my God, like, my little sibling keeps knocking all my stuff over and breaking all my stuff, and it's so frustrating. But every time that happens, and it happens to us in the work world too, where I'm a spreadsheet nerd, right? So it usually happens to me with a spreadsheet, but I'll build a sweet spreadsheet, and then the computer crashes, or you think you saved it, but it didn't save, or whatever the case is. And like, the initial reaction is like, ugh, right? Like, I got to go rebuild that thing. And a business is just a bigger version of that. It's like, I built this badass business, and now it's like, oh, I got to go rebuild that thing. And so that's the initial response or initial reaction that you have. And then slowly you start seeing the opportunities to rebuild it, and you start getting excited about rebuilding it because you're like, oh, I could do it this way. Oh, here's the thing where I was like, oh, it would have been hard to, once I had it built that way, I'd have to like tear down half of it to rebuild it this way. But now I get to rebuild it this way right from the start, right? So you get to build the foundation differently. You get to try different things. And so it's kind of like enlightening and exciting to have the opportunity to go do it again in a different sort of way, in a different capacity. So I'm kind of re-energized by it in a way. Like, A, it's all mine, which is super fun. I've never had a business that was all mine. I've had partnerships in everything that I've done. And so to have something where it's just like, especially with me, with my personality and being beer drinking, bullshitting Dan, it's kind of fun to be like, just going to embrace that and not have to worry about the interplay of a bunch of partnership stuff with that sort of thing. So that's pretty exciting. And just the opportunity to tweak this, tweak that, fresh start. So I'm off and running with Best Damn Bookkeeping. I think we were talking about that earlier and how we got to that name. But I wanted it to be goofy and edgy. And like one of those things where you almost like offended when you hear it, but you're like, I just kind of got to know what this guy's all about. So Best Damn Bookkeeping, the logo's got a beer mug on it because if you know me, you know that I'm probably having a light beer while I'm talking to you. I'm not right now, which is surprising, but normally I am. So just making it my own thing and having a blast doing it.
Bro, I remember when I first hired you to help me go through the last. You said we can go back to this calendar year, or we can go back 2 years, or like I was like, we got to go back 2 years, bro. And so, bro, it was like ripping up floorboards, and it was like, it was time consuming, and you were doing most of the work, and I was.
Yeah, I was in there. I was undoing and redoing and putting the hammers and the nails in.
And bro, when it was all said and done and you finally created the first profit and loss statement and then showed me how to read it and went through it all with it, like, it was a beautiful work of art. It was meticulous. I saw exactly how much money was coming in, how much money was going out, the percentage spent on cost of goods, admin, every little tiny expense for both my businesses. And I felt like, boom, proud. I felt like, bro, I've made it. Like, I'm successful because I knew the percentages. Like, it's like a health snapshot of the business, right?
Yeah.
And so it's meticulous, and I love your business, Best Damn Bookkeeping. The first time I heard it, I'm like, that's perfect. So, and when you talk about like the ups and downs and you like the purgatories and stuff you're going to go through, because you were sharing with me before we went live here, the hard things that you go through in business and the mindset of, all right, how am I going to pull myself up by my bootstraps and get out of this? And for me, this big epiphany is that nobody cares. I think, and it's like, nobody cares, work harder, like this macho man bullshit. I don't mean that. I'm like serious. Nobody cares if something's hard. So that the hard things that you pull yourself out of and then you step on become foundations of your success. They become stepping stones.
Yep. You
solidify them through the experience when something breaks down and goes wrong. It's like Brian Tracy said, when the car breaks down and everything is falling apart in your life, the person that comes out of you then, that's who you are. And that's what makes people. So teach us, Dan. What's up, bro? You're awesome.
As you're saying that, Sean Day, who runs Hire Lead Chill, shout out. Well, we're gonna talk probably tomorrow about the group interview process and some things we help people with at Hire Lead Chill to get that squared away. But Sean Day,
real quick, he said tomorrow. I like that. A quick segue. Look out for that. If we don't, depending on how long this podcast is, we might be doing 2. So make sure you get on my email list. Go to the Untrapped podcast. How can somebody get on my email list for the podcast?
We've got all kinds of stuff to talk about. They better get on every automated sequence that they can possibly follow.
Here, this will get you on my email list real quick. We have a free PDF download. It's actually a free ebook guide we created. It's the 4 steps to training employees, a step-by-step guide, and keithkelfis.com/4 steps. It's not FOUR, it's just the number 4. keithkelfis.com/4 steps. You'll get the free PDF download of how to train employees to get them to actually perform. We could get a train, like anywhere from 2 to 3 hours, we can teach an employee how to do something, and then I can leave the job site and they won't screw it up. So get that, and that'll get you on my email list, so that way when we put out these podcasts, you'll get notified when we put out a new show.
Go grab that, and then tomorrow when I'm talking about Hire Lead Chill and helping people get employees, and then how to like interview them to find the right people, that's all stuff you got to do right before you implement your knowledge there in that course.
That's perfect. And hire, lead, chill. So
it's the 3 steps. It's the 3 steps to building your business. First, you got to hire them. Then you got to lead them, and then you got to build a chill culture so they don't want to leave it. Because people will leave to go, like they'll come for more money, right? It's just like back when you were dating, right? You're at the bar, and all you get is the looks. You're just purely going by looks because you don't know what they're like, right? The only thing you have is the external. which is why everybody tries to go look real good when they're going out, right? Back in the single days.
I met my wife in a karaoke bar, and I was like, oh, my God. I said to my friend, I go, who the hell is that, bro?
Yeah. But it was, at the time, it was just visual, right? That's all you got. That's all you have to go by, right? Applicants are the same way. That's all they have to go by is how sexy you are. That's all they have. They don't know what your culture is. They don't know what you're all about. They just know how sexy your job ad was. You're just a girl in the bar or a dude in the bar, depending on which side of that table you're on. So we were talking about that earlier. I'm going to get into the group interview process on a different little segment that we do here. But I think it's just real important that the reason why we're hire, lead, and chill is like you can hire all the people you want, but if you are a shitty leader, you're done. They're not going to stay, right? You might be sexy in the bar, but if you suck as a leader and a CEO, they're not going to stay. It doesn't matter how good you are at hiring people. If you're a bad leader, they're not going to stay. If you're great at hiring people and you're a good leader, but you have a shitty culture, people will leave that too, right? They'll come for the money and the sex appeal, but you need to lead them and you need to build a company that when you're not there, every vibe about you, every core value, every being that you've implanted in that company is still there, that culture exists and exists when you're not there. Because as you continue to grow the business, you might be a great leader, but you're not interacting with the technicians anymore. At some point, you interact with the leadership team, and that's it. And if your leadership team sucks at being leaders, your business is broken, right? You can't chill. You have a shitty culture. So you got to hire them, lead them, and then you got to build a chill culture where people want to stay because they really enjoy being there. And it's no longer because of you. It's because of everything you've built, right? The who, not the how that we were talking about earlier. So anyway, I digress. We'll get to that on a separate episode. But that was why we called it hire, lead, chill. It's really the three segments to scale your business. You got to be great at hiring them, but it doesn't stop there. Then you got to be really good at leading them, and then you got to be good at leading leaders. Eventually, like you're not the one leading the people. You're the one leading the leadership team, and they got to be good at leading people. You got to build that culture, which that ties into the purgatories we're going to talk about, because the purgatories also happen at each phase where you like jump from one of those things to the other thing. That's where your business breaks.
So I've heard of cash flow purgatory, and now you're talking about the purgatories of scaling.
Yeah, which go along with the cash flow purgatories because they all happen at the same time. They all go together.
Bro.
We'll get into it. But you were talking about when I first engaged on the bookkeeping stuff with you.
Yeah.
So I'm going to take you back there because bookkeeping gets misconstrued a whole lot. So I'm gonna just turn into total Dan nerd here and talk quickly about what the fuck is the point of book. Can I swear on your podcast? It's too late. Beep it out. But like, what is the point of bookkeeping? It sounds like such a stupid ass term. It's super boring. It's nerdy accounting stuff. It's just a thing you got to do for your CPA, blah, 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 blah. But when you got that scorecard, it's no different than, imagine playing a football or basketball game and you don't know if you're winning or losing. Maybe the ref knows, the tax person knows, but what if you don't know? That's a weird game to play. If you're in the middle of a basketball game and it's halftime and you're like, Coach, how we doing? Like, I don't know, man. Just keep playing hard, Keith. Just keep playing hard. Like, could you imagine playing sports without a scoreboard?
And he's not talking about a whole big complex thing. He's just talking about a simple scoreboard.
Just a scoreboard. What's the score? Like in your business, the score is your financial statements. That's the score. And you're playing a math game. If you own a business, if you're running a business, you are playing a math game. That's what you signed up for, which sucks for some of us because, I mean, for a lot of us, like, If somebody would ask you, like, you a math person, most of us would be like, no, man, I hate math, right? For a lot of us. That's fine. That's totally fine. But regardless of whether we love math or don't love math, our business is legit a math game. That's all it is. It's a series of decisions that we make, and our business is only as good as the decisions that we make. And whether we like it or not, every single decision we make is a math decision. I don't care if you're looking at buying a piece of equipment, hiring an employee, taking that employee to lunch, or training that employee, or spending money on marketing, or spending money on recruiting, or looking at renting an office. Every single one of those things I just said is a math decision. Every single one of those things needs to return you more money than it costs you, or you go out of business. That's it. That's all business is. It's just a bunch of math decisions over and over and over again. And so how the hell are you going to play that game if you don't know what the score is? You got to know what the hell the score is, because every decision that you make is based on that score, right? If it's the fourth quarter of a ball game, every decision you make about who's going to play, what play are we going to run? Are we going to hold on to the ball, or are we going to take it to the hoop? Are we going to foul, or are we going to play back, like kind of a prevent defense? Every decision you make is based on what the score is. So how the hell are you going to run a business and not know what the score is?
If you are looking for the greatest software ever to run your business on, go to getjobber.com/Keith. You can create proposals, invoices, collect payments, and track your entire business directly on the Jobber smartphone app. If you want to get a totally free trial of Jobber right now, open your browser, type in getjobber.com/Keith, and after the trial, if you decide to sign up with Keith's link, you'll automatically get 20% off your first 6 months. So what are you waiting for? Go to getjobber.com/Keith.
You got to know. And bookkeeping falls into this weird, bookkeeping is the scoreboard, but it falls into this weird space where it's not super understood. It kind of seems, these two things are wrong, but it kind of seems like something that our office admin person would do, or maybe like, I like to say it's like falls into mother-in-law work, which is accounts receivable, collecting money from your clients, accounts payable, paying your bills, payroll if you have employees, making sure they get paid. Like, is that bookkeeping? No, it's not, but it kind of sounds like accounting stuff. Like, it has the word account in it, so it must be accounting, which accounting is bookkeeping, right? Wrong. Like, all of that stuff, we can hire an admin to do, right? Can you send your client an invoice?
Mm-hmm.
Yeah. Do you know how to make a journal entry for when you trade in a vehicle?
Yes.
Do you really?
Yes.
Wow. Look at you go.
But that's just
I want to make you do it later to see if you actually know.
All right, we'll log into QuickBooks and I'll do it.
But that's the thing. It's like your office person can oftentimes send an invoice, pay a bill, enter payroll information, how many hours did this person work, whatever. But that doesn't mean they can organize a profit and loss. That doesn't mean they can look at a balance sheet and go like, hey, we got something in the wrong spot, or we got this much invested here and it's not paying off, right? So bookkeeping is a little more accounting intense than just paying bills and collecting on your bills. It's more organization. It's how do you build the scorecard, right? Different than the office administrative stuff. The other spectrum is people think, oh, bookkeeping is something my CPA would do. They're the ones that need to pay the taxes, and bookkeeping is a tax thing, right? Wrong. It's not a tax thing. You can do your taxes with a box of bank statements bank statements and like a box full of receipts. You don't need QuickBooks and an organized P&L to pay your taxes. You can do that a lot of different ways. There's plenty of CPAs out there.
That's how I used to do it. I would just download all 12 months of all my bank statements.
Here you go.
Then I did it on paper first, and I'm like, screw this. Then I download them all digitally, and then I put them on a Google Drive folder in the cloud.
Yeah.
So every year I have 2019, 20, 21, 22, 23, 24, my taxes. So everything related to the taxes and everything for that year gets uploaded to the cloud there.
Yep.
And then I just share the link with my accountant. Boom, he's got all the bank account statements. He's got everything.
Yep. And he can do his job. He can do the taxes, but he can't tell you what the score is.
Nope.
He can tell you what you owe the IRS, but the game's over. By the time you get there, that game's over.
Mm-hmm.
So how did you know how you did all along? You might have made different decisions that whole way along, right? Like the season's not over, but the game is over. If a game is a year long and the season is however long you're in business for, like that game's already over. You might change by the next game, but maybe there was something you could have done differently to win that game before the season was over. So where bookkeeping comes into play is in between that office person and them collecting bills and paying payroll and the tax person at the end of the year getting the IRS settled up for how well you played that game. That's their job. But in between, the bookkeeper is the thing giving you the scoreboard, telling you, are you winning? Are you losing? And here's what the strategy should be. A good bookkeeper is also like a coach. They're your finance person. They can tell you, here's what the scoreboard says, and they can tell you based on the situation, maybe you're not winning here, maybe you're winning over here. Here's some things we could do differently to maybe win this game. That's what your bookkeeper should be doing. So bookkeeping in between is all about organizing your stuff, making sure it's in the right spot, making sure you know what the percentages are, and giving you some analysis that says, here's where you're winning and here's where you're losing on this scoreboard. Because the tax person's not going to do that for you. The tax person probably doesn't understand how the hell you even make money. They don't understand your business. They understand how to take the numbers from your scoreboard and put them into their software to make sure the IRS gets paid correctly. I tend, and this isn't all CPAs. This is a generalization, right? But when I hear somebody say like, oh yeah, my CPA does their books, my usual response is, do they do them for you or do they do them for themselves? Because usually when a CPA is doing your bookkeeping, they're not asking you questions every week about what's going on. They're not sending you reports every month to tell you how you're doing. They ask you questions maybe once a month, maybe once a quarter, and their questions are only to help them organize them in a way that they can put it into their software. They're charging you, right? They sure as hell are charging you this whole time, but they're doing your bookkeeping for themselves. They're organizing it to put into their software so that come tax time, their life is easier. They're not organizing it in a way to say, hey, Keith, here's how you're performing. Here's how you're doing. Here's some things you should do more of. Here's how you should do less of, because they don't usually understand your business model. They understand some things you can do for tax savings, maybe. The good ones can. But they're generally organizing it to put into their tax software. So they're charging you. You're paying them for them to do the bookkeeping in a way that benefits them. Makes their life easier. So they're literally like sending you an invoice to make their lives easier, which I think is just hilarious. They're not doing the bookkeeping for you. They're doing it for themselves.
They're not saying, hey, last month this was your cost of labor and this is how much you paid in insurance. And they're like, so in percentage.
Yeah, and your marketing was 10%, but historically it's been 15. And was that strategic? Was it, did you get a good deal? Is it just a cash flow thing? Like, they're not looking at that. It's just all going into a category for where it goes into their tax software. And I'm generalizing, right? There's some really good CPAs out there. Mm-hmm. There's some really, really bad ones. So it's just my caution is if you're using a CPA and they're doing your books, just make sure they're doing them for you. Because generally they're charging you to do your books, but they're doing them for themselves. They're doing them to make their life easier, not your life easier.
7 minutes ago, you asked me if I could make a journal entry for
trading in a vehicle.
And I said yes. But I made a mistake, and it's bugging me now. My bookkeeper that you assigned to me, I went through because I had an Amazon credit card because I get the points, and it's the only card I do this on that I was mixing personal purchases with that, so I had to go make a special itemized spreadsheet for him to categorize which one of those were business purchases, so we could just fix it. Not even a big deal. And then when you said journal entry, my head went right to that, and I said yes. But I've never gone on QuickBooks and made a journal entry for what you just said. I know I could do this shit, so I basically told like a white lie and didn't even need to, and it was bugging me, so I had to fess up. Because your whole point was like, you can do this. Can you do this? Yes. Can you do this? No. And you were going to say, that's what a bookkeeper or a good bookkeeper knows how to do. Is those things that are so vital to your business.
This is not an insult to you at all, Keith. I promise you couldn't make that journal entry. Just because it's stupid accounting stuff. It's not that you're not capable of learning it. I could teach it to you before we left here today. We could have a couple beers while we're doing it. You're capable of learning it, but even if I showed it to you, you'd be like, get the hell out of here. You'd look at it, you'd be like, that doesn't make any sense. And I'd be like, yeah, it doesn't. It's accounting. It's like its own language, right? There's these professions that have stupid-ass languages built just for themselves, created by people that I'm pretty sure only created them the way they did so that nobody else could understand it. It's like a job security thing. Lawyers are the worst. They talk in words where you're just like, just tell me what you're actually saying. Every time I read a legal document, I'm like, can't you just like write it in words that make sense? Why do you got to write it in all this nonsense? And then I say that, or I feel that, and I'm like, oh yeah, but I do accounting. I'm one step below them and talking in a totally different language of debits and credits and P&Ls and balance sheets and saying words that other people are like, dude, can't you just like talk in words that a normal human would understand? So lawyers are the worst. I think accountants are the second worst at just speaking over people's heads, saying shit that they don't understand. So yes, you could learn that journal entry, but if I put it in front of you right now and said, hey, Keith, here's the data you need to make this journal entry, you'd be like, this is bullshit, Dan. But that's fine, because knowing how to do that should not be a thing you're concerned about.
No.
You should not. It's not going to. You need to.
Not how, bro.
Like, how. When did you play sports growing up at all?
Dabbled in sports.
Did you ever look at
basketball and soccer?
Yeah. Did you ever look at a scoreboard?
No.
Bullshit. I bet there was a scoreboard on the wall that said how many points the home team had, how many points the away team had, how many timeouts, or something like that. Right?
Never. No, I was never. That's funny.
I don't know. I just feel like there had to at least somebody had to be like flipping a thing.
Nah, we played football and we were kids in the projects.
Oh, okay.
But then when it came time to actually be on a sports team, I just wanted to go home and play Dragon Warrior and video games.
I got you. Well, those have scoreboards too, right? Like when you play a video game, there's a score.
Definitely.
Like
I loved, what was the NBA Jam?
Oh, dude. He's heating up.
Oh, my God. I play that all the time.
So there was a scoreboard there.
That was one of my favorite games.
But every time you're looking at a scoreboard, your job as the business owner is like, what's the score? That's what you should be thinking as a business owner. Not how the hell do they use the electrons behind the scoreboard and the electrodes to make the thing light up, right? Like, how the scoreboard works is the bookkeeper's job. What the hell the score is the business owner's job. You don't need to know how to make a journal entry when you trade in a vehicle. That's not the business owner's job. The business owner's job is to know what my cash flow is, what my investments in these different things are, and what decision I need to make as a result of that based on the score. You don't need to know how the damn scoreboard works. It helps to know a little bit about why it goes here, why it goes there, and what it all means, but you need to know how to read the scoreboard so you can make decisions with it. That's what you need to know as a business owner.
Bro. So, I read a lot of Kiyosaki books. He talks about trusting the bookkeeper, because some people think like, well, I'm going to trust a bookkeeper with all my stuff. Well, yeah. And then once you got your bookkeeper, just like if you trust, I don't know, somebody to work in your business, then it becomes, I'm so glad this person's on my team. What's your whole thing on that? If somebody's like, well, I want to hire a bookkeeper, but I don't know, like, you know.
Yeah. I mean, it's no different than anybody else that you'd hire, right? You can't just blindly hire somebody and be like, I've heard Brandon Vaughn say this, and I don't know exactly where he got it from, but I don't think it's an original quote, but you can't delegate through abdication. You can't just be like, all right, here you go. Peace out. Because they're not going to be able to read your mind, right? And they might suck. So anytime you hire somebody for anything, you have to have systems and processes to verify, right? Trust, yes. Verify, hell yes. You still need to make sure they know what they're doing and that they're able to do what they said they were going to do, right? I don't care if that's a technician, an office manager, a bookkeeper, a CPA. You can't just like blindly hire somebody and be like, your problem now. Tell me how we're doing, right? If you totally check out on it, you're going to get blindsided by it. And frankly, like as a nerdy bookkeeper, I can't do a good job for you if you totally check out on it because I can't read your mind. I don't know everything that you're up to. I don't know when you spend money at Amazon and it's personal. All I see is that it's Amazon. So I got to bug you about it. So we got to it's a communication thing, right? I got to bug you about what was this? What was that? Is it always this? Is it always that? Should I ask you about it every time? It's a relationship, right? It's a two-way street. It's a communication thing. So I think the number one thing to look for, and any finance person, I don't care if this is a bookkeeper, a CPA, your office manager, whoever it is, can they communicate? Do they communicate regularly? One of the things that I'm super passionate about in our bookkeeping, and I built it this way at Blue Skies, and I'm building this the exact same way at Best Damn Bookkeeping, is it has to be weekly.
Bro, you want a pillow behind your back?
Yeah, I got a little one here. I got a little lumbar support. I mean, I'll stack them.
Stack them.
But
is that better?
Yeah. Oh yeah, look at that.
Yeah, he's chilling.
I got my Responsibid socks on. Shout out Kurt Kempton.
Kurt Kempton, Responsibid.
Yeah, dude, Kurt is my official sock sponsor. I got so many pairs of Responsibid socks. They're so good.
Dude, I should give him a shout out real quick. Go to keithkelfis.com/resources if you need an awesome software to plug into the front of your website that'll automate the bidding. Dude.
And if you want some sweet socks, look at these. Making Waves. This was from Response Account a couple of years ago. Making Waves. But again, anytime you're like hiring a finance person, any role for your business, you can't just turn it over blindly, right? You have to know enough about how to read the scoreboard. You're playing a math game. If you're a business owner, you're playing a math game, you can't just totally check out on it. And for your bookkeeper to do a great job, communication's super important. So for what we did at Blue Skies, what I'm doing at Best Day in Bookkeeping is it has to be weekly. Checking in with every single client every single week, even if it's just to say, hey, Keith, everything looks good. You're good to go. But I know that if I have a question for you about what happened this past week, and I say, hey, Keith, what was that Amazon? You'll be able to say, oh, that one was personal. Put it down as a distribution. Or, oh, that was supplies. But if that was 2, 3, 4 weeks ago, there's no way in hell you remember what that $96.37 was. There's no way. You can't remember. If it happened this last week, there's a good chance you remember. If it was before that,
I just go look at my Amazon and I can see all the purchases with the pictures attached.
You could, but it'd be way easier if you didn't even have to go look, right? If it was just like, yep, that was this, done. Versus all of a sudden, if we wait a month, now I have a list of 20 things for you. You're gonna spend a half hour of your time going and getting answers for me.
My bookkeeper did. I was at the Equip Expo in Louisville, Kentucky when I was on the road. He messaged me and I couldn't get back to him. He's got 2 questions about 2 transactions and what they were because they're the numbers, and I just got to go look.
Boom.
Done.
But if it's a month old, that's 20 questions. And you're not going to remember. It's going to take you 20, 30, 40 minutes of you going to look at your Amazon to give them an answer, right? If it's weekly, answers are quick. Communication's fast. Mm-hmm. Results are fast. By the time you get more than a week old, like, you don't remember. You got to go look. And then that list gets a lot bigger. Mm-hmm. And then you answer 15 of the 20. The other 5 are still hanging out there because you're like, oh, God, I need this documentation from the thing. So super, super important to do it every single week. And then the result at the end of the month, you have to get that scoreboard fast enough that you can actually do something with it. Because if I waited till the end of the year to give you 12 scoreboards, you've missed the opportunity to change what you're doing and make decisions along the way. So we did it at Blue Skies, and I'm doing it the same way in the new business, which is you need to get the end of the month report by the 10th of the following month. That's a week to get the transactions in and a couple days to get the questions answered, reconciliations done, make sure everything ties out. Then you need to get that scoreboard because you have decisions to make. You're running a math-based game. You got to be able to look at the scoreboard, make decisions, ask questions, right? Because if you don't open that P&L report and say, does this make sense or does this not make sense? Maybe I put something in the wrong spot. Maybe I thought your Amazon was this because every other time we've called it tools, but you just spent $1,000 and it was on a new computer that you bought off Amazon or something, right? And so if you don't look at the scoreboard, who's going to look at it, right? It's your scoreboard. And if it's 2 months old, you're not going to scrutinize it. But if it just happened this month, you're going to be like, man, why is my office supply so high? Or why is my COGS, tools and equipment so high, right? And
cost of goods sold.
Yeah, that's COGS. Yeah, I just jumped the gun on that one, didn't I? But I mean, like, yeah, you got to look at it. You got to look at your scoreboard. You got to know what it's saying. And it's got to be timely enough that it's relevant to you as you're running your business. So it's kind of it's a speed and accuracy thing, which in a funny way, that's no different than if you're cleaning windows. That's no different than if you're mowing lawns, if you're doing a landscaping project. Every employee I've ever hired in any of our businesses, I tell them 2 things. I think it's 2 things. I'll say it out loud and then we'll decide if it's actually 2 things. This is what I tell them. Say, I need you to do this. You need to be really good. You can never sacrifice quality, right? You have to do a good job. If you do a bad job cleaning windows, we're going to get a call. If you do a bad job mowing lawns, we're going to get a call. If you do a bad job bookkeeping, we're going to get a call. And you have to do it really fast. If you do a slow job cleaning windows, we lose money. If you do a slow job mowing lawns, we lose money. If you do a slow job bookkeeping, we lose money. I never charged you more if it took us longer to do the bookkeeping, did I? Your price was always the same every single month. If it took us longer to do the bookkeeping, the business ate the cost.
Mm-hmm.
And so I can't have a bookkeeper that's an amazing bookkeeper and takes 20 hours a month to do your books, or I'm going to go out of business. And the same exists for every single business that any of us, anybody listening to this podcast, any business that they have. I don't care if they're a fucking shoe shiner, Keith. If they are in business, running a business, they need to be really good and really fast, and you can't sacrifice one for the other. Because if you're really good and you're really slow, you're out of business. And if you're really fast and your quality sucks, you're out of business. Right? Your best employees and you have to be both at the same time. You have to be really good and really fast, which is why bookkeeping is so important to do every single week and really quick turnaround at the end of the month, because you have to be really good and you have to be really fast, because the scoreboard ain't waiting for you, man. The world keeps going. The customers need their stuff done. Your employees need paychecks, and you got decisions to make. You got to be good. You got to be fast. I'm talking Ricky Bobby. We're talking about Ricky Bobby.
Bro. It's so nice to have you on the show, man. I don't even have to say shit. I can just...
I was going to say, that's the danger of having me on the show, is we might be 2 hours in by now. I don't even know what time it is. We'll just keep going.
52 minutes, bro. You know, I've been practicing because I make YouTube videos. Some of you guys listening make YouTube videos. I'm always the one doing all the talking, and it's nice to relax. And so my ego wants to chime in and start saying stuff. And I say, I've grown past that. Just relax. Let Dan talk. Because if I start talking, I might, you might have, the prime is pumping the prime, like the well is spring. Like you might be coming out with some really good gold. Just let you flow, bro.
I can only imagine how much of a pain in the ass I am as a guest, in terms of you might have like questions you want to ask, but since I find this when I host podcasts and my guest is another podcast host, you have to like give them more runway because they're just inclined to act like a show host. They'll just go.
Yeah, sometimes they'll forget that you're interviewing them.
Yeah.
And they think they're interviewing you.
Or you start asking them questions, and they start asking you questions back, and you're like, I just forgot who's hosting this show. I don't even know anymore. Like, it's just a host off.
Yeah.
But no, you know me, I'll keep going.
When I first started my window cleaning business, and I was being such a perfectionist that I couldn't sleep at night, bro. Because windows, you can see. Like we do, I was doing snow plowing and window cleaning in the winter. Mm-hmm. And I dropped the lawn care and picked up window cleaning instead. We still do tons of landscaping, but with the window cleaning, you can see any imperfection on the glass. And if you can't see it, just move to a different angle and you can see it.
Yeah, it's there.
So,
especially if it's cloudy out. It's there. You ain't looking from the right angle yet.
So I have tons of videos on the Window Cleaning Blueprint YouTube channel where I talk about crazy stuff like this, funny, comical stuff too. One funny video I talk about perfectionists. So the guys have already went into the truck or the van, your employees, you're just collecting the check, and then they're like, wait a second, I saw a little speck here. Well, instead of just getting that little speck and then bouncing her, I tell my guys, go around with microfibers, do whatever you got to do, and keep going. Don't stop until I walk out of that house with a check and a smile. Just keep making it perfect, so the customers know we worked by the sweat of our brow. We did a great job. Like it's that feeling the customer gets. Okay, you guys are good.
It's the perception that you worked until the last minute and weren't just hanging out.
100%, bro. But sometimes when the customers are so picky, you can't make them happy. I have this. It's a funny video, bro. I said the guys that have already gone and sat in the truck because you thought you were done, and then now you're in anxiety because they're on the clock, and the customer's like, what about this spec? And there's not enough time to go tell them to call them back in, so you just get it real quick, and then there's another. And then, but I said sometimes I would say like I would purposely start picking out little imperfections just to add to it. To see how far, Mr. Customer, you're not going to show me. I'm going to show you.
Here's another one. I don't know if you noticed this one, but I can see that one.
Yeah, do you see that one? I said, and then the grandma gets up and goes, and that one too, and that one there, and there. And I say, no more profit for me. Like that. And I say, come on, guys, get out of the truck. Come on back in. And the customer, after you make it perfect, no, it's good. It's good. No, we're going to make your windows shiny. And I was like, we'll stay for an extra 45 minutes. Like psychopaths make it in a very friendly way, but like just to prove a point.
Yeah.
I don't even care about money. I'm going to make your like, and it's like it's this sadistic thing I was going through because I felt like I couldn't win, bro. But so now we have pre-trip inspection. We make sure I point out little imperfections. I explain it to the customer over the phone and let them know, hey, we're doing an initial, like a basic cleaning. If it like, I'm going on too much about this.
But I think this exists in any business.
Oh yeah, the speed of it. So I found this guy on YouTube at that time. He said, I would not do this, but he was like, and he was an older guy, and he was like one of the first guys to make window cleaning videos back in the day. He says to the customer, listen, I'm like the McDonald's of window cleaning, okay? I charge you a super fair price. I get in and out. Your windows look 100 times better than they did. I'm just not going to go out of my way to be climbing over a washer and dryer.
Yeah.
And to get...
You ordered a Big Mac. I'm not giving you a steak.
Exactly, bro. And I climbed up on some dude's dryer in a beautiful house, and my knee, right on a soft spot, put a big dent in the dryer. Then I had to go get tools and take the dryer apart to pop the dent out and put the dryer back. And there was still a little bit of, and I was about to buy the dude a whole new dryer. And he's like, no, it's fine. But from an angle, you could see a little bit of a dent from my knee and I was panicking and shit. And then he never called us back. And it was probably just because maybe his wife, and I'm like, are you sure your wife is going to be cool with this, bro?
Yeah.
And it's like the stuff that you go through in a business. So you got to be really, really, really good, but you got to be really, really, really fast at the same time.
Yep.
What is good and what is fast, different conversation for a different time. But
that I feel like it's just expectation setting, right? You can't set an expectation that you can't live up to. And Debbie Sardone, who's a good friend of mine, and she's a maid service coach, like the queen of maid services.
I think I just saw her at Joshua Latimer's War Plan Studios.
Yep. I believe she was there.
They were on some Zoom thing.
Yep.
Yeah.
She is.
That lady's pretty sharp, man.
She's so good. She's so good. But one of the things I saw her present one time, and she was talking about making a brand promise that you can keep. And her brand promise for her maid service business had nothing to do with quality. Nothing. Her brand promise was she has a not-for-profit called Cleaning for a Reason, and they clean for cancer patients. And that was their promise, is we're going to clean so many houses for cancer patients.
Wow.
Like, are they going to clean, if you hire them as a maid service, are they going to clean your house? Sure. Are they going to try to do a great job? Yep. Are they going to make mistakes? Yep. Right? Like, you're hiring a maid service that's a growing business. They're going to screw some stuff up. That their brand promise had nothing to do with we're going to be the best cleaners, we're going to be the fastest cleaners, we're going to do, whatever promise you could make about quality. They made none of it. That wasn't their promise. Their promise was we clean for cancer patients. Like, they built a brand based on that. And I was like, that's freaking awesome. I never thought about it that way. But it's an expectation setting thing. Now, internally, you still need people to do a really good job, and you still need them to do it really fast, and they have to do both, right? And that's any role in your company. They have to be able to do both. I don't care if it's a salesperson, right? If a salesperson's a great salesperson, but they only get to 2 quotes a day, what good are they, right? Unless they're selling $10,000 jobs every time you turn around, like, they're probably not selling ridiculously high jobs. They're probably selling the same average ticket, and if they're only doing 2 instead of the 8 that they're supposed to be doing, it doesn't matter what their close rate is. They're not fast enough, right? So it's like you got to be able to do both. And the best employees, actually, in my experience, the best employees usually can do both. They are really good, and they're just that good that they can also do it really fast.
Dude, I got this guy who works for me, of all things. He's motivated by money. He doesn't care about, man, you did such a good job or any of that shit. It's, bro, I baked in a $200 bonus for you on this job because I know that this doing the weed, or even a $400 or $500 bonus because I know that you hate doing the weed fabric. I hate doing the shit. I can do it just like, actually, I can't do it as good as he can. And he's like, sweet. And dude, he'll just start ripping out roots and boom, 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 and weed fabric and pins and like the money, it just pays for itself.
Yep.
Because he does it so much faster at super high quality. So but we have a conversation beforehand. It's like, it's got to look super sweet, just like you did the last one, even though you don't want to do it. It was like the money's the motivator. It's funny. But that's funny. You say you build in the expectations and the culture ahead of time.
You have to. But with both the employee and with the customer, right?
with the customer.
Because if the customer doesn't have a good expectation, then you're going to be chasing your tail the whole time on that relationship. If they think something different is going to happen, right? If they think they're going to get a steak, Sean Day, who runs Higher Lead Chill, when he first started working for us back in the Blue Skies days, he ran all of our maid service businesses. What an unfair job. I'm so sorry that I put him through that. It's the worst thing I've ever done to a human being.
Looking to maximize your production in the field?
Ballard Products has over 300 products that can help you get the most out of your efforts every day.
Ballard Products. Whether you are looking to get a better cut, keep your gear on your machine, keep your expensive equipment clean and safe, or just get the most out of your machines, Ballard has you covered. Ballard Products. Jump onto our easy-to-use updated website at ballard-inc.com to get your gear ordered today. Keep grinding. Stay safe. And have a great season.
Ballard.
Make sure to use the code Keith10 to save 10% on our full line of gear. That's Keith10.
But he ran all of our maid service businesses, and that of all industries, like you're in people's houses touching their stuff, right? It's like as personal of a thing as you can get. It's like, I would say that's more personal than doing business owners' bookkeeping. Because at least most business owners are like, I never go into my QuickBooks. I have no idea what condition it's in. Like, every person that hires a home cleaner knows exactly what condition their home is in, right? And you're going in and touching all their stuff and cleaning it and organizing it and all that stuff. And one of the biggest challenges you'd have, kind of like the example you gave on the window cleaning, is like, as a human, if you're passionate about your thing, like, it's really hard not to go above and beyond and do free shit for people. Really hard not to. As the business owner, I absolutely reserve the right to do that, but I can't scale a business with a bunch of employees that do that, because my sales team, or me if I'm the salesperson, I'm selling a Big Mac, right? And if Mrs. Jones calls and I say, Mrs. Jones, we're selling Big Macs here, and here's how we make a Big Mac, and it's got this and it's got that, and this is what it's going to look like. And then this cleaner goes in and cleans this way, or this bookkeeper goes in and does it this way, and they deliver a steak. All Mrs. Jones is going to think is, oh, I can pay $6 for a steak.
Oh, my.
Right? I pay $6 and I get this steak. And so then if you...
Bro, I was delivering filet mignon steaks for pennies.
Yeah. Yeah, and then the next person you send cannot deliver a filet mignon steak, does exactly what you told Mrs. Jones you would do, does exactly a Big Mac, which is what which is what Mrs. Jones is paying you for.
I raised my prices dramatically and lowered my quality just a little bit. Lost all my beginning clients. It took me first 2 years to build. Mm-hmm. Maybe a couple stuck around.
But their expectation was, I get a steak from Keith and I'm paying for a Big Mac. You were giving them a steak.
I was the talk of the town, bro, in a good way.
I bet they loved it, right?
They loved it, bro.
Yeah. Who wouldn't? Until you started giving them what they ordered, right? They ordered a Big Mac. You told them you were going to give them a Big Mac. You just gave them more. So their expectation was one thing, and
I'm going to get sick thinking about it.
You changed their expectation, and then the minute you started delivering what they were paying for and what you originally promised them, like, they're disappointed. So you can't scale a business by delivering a steak when you promise a Big Mac. Like, kudos to the dude you were talking about that was like, I'm the McDonald's of this service. Like, I'm fast, I'm efficient, you get exactly what you paid for, but I ain't crawling over that thing to clean that window. This ain't a steak. This is a Big Mac. And if you want a steak, go hire.
You can actually just use an extension pole. Here's something I learned from Bobby Walker, but I use it on the inside. So when they power wash like someone's front porch, they'll take a picture of all the patio furniture and how everything was all set up, move it to the side, power wash it, look at the picture, put it back.
Yeah.
Ta-da.
Yeah.
I have customers inside of the house. There's the kitchen sink, and they have this huge, like, beautiful granite in a kitchen window, and they have all the pictures of, like, the family and, like, the little statue of Jesus and all these things, man. And I used to just move it all, and I'm like, oh, shoot. So now my customer comes. It's my customer's wife, and I'm taking a picture of all their family pictures.
Yeah.
I'm like,
it's not what you think.
No, I'm just taking a picture of this so I remember exactly where it goes, because I want to be respectful and honorable, right? Boom. And then I was able to put it all back perfect. And he's like, I didn't even care if you put it back perfectly. You do such a good job, you know. But it was like. But
did you charge her for that?
Yes, I do charge. I raise my prices all the time. And so, like when we power wash our front or back porch, we take a picture of it and put everything back how it was.
Yeah.
I
dig it. We should talk about since you switched your financial day to be Friday finances, which I'm a huge fan of alliteration, and I didn't realize that we were walking earlier, and you're like, hey, Saturday, I used to rave about doing Saturday finances. Now I do Friday finances, and now not only does the work get done, but it also sounds better. I've got Platta's 5 finance fundamentals. So I'm not trying to like one up you on the F thing, because I'll F our way right on out of here. But in addition to what we were talking about earlier about what bookkeeping is and what bookkeeping isn't,
and keep going. I'm doing this on the podcast. My OCD's kicking. See this little tiny green? It's a little wooden, like a jack.
Yeah.
What is this called? Is that I call it a jack?
I think it's a jack.
Yeah. So I had it perfectly so it's sitting right in the green.
Like, I see that. I see how you got that there.
Oops. My friend Rob was a producer, and I hired him to come to my studio and teach me stuff like this.
That's
neat. But then I moved the camera while you were talking because I liked it better, a little more face down angle.
And then the jack was in a different spot.
And then it changed, and I'm looking at it. There you go. And I want that right on the white, so it just kind of pops, so it separates.
That's nice.
Right there.
I see what you're going for. Yeah.
Okay, so then visually, aesthetically, it just kind of looks.
That's good stuff.
Even.
I'm glad you addressed that. I feel like we need to record the last hour over again, though.
No.
But one of the things I run into, Keith, back to the nerdy finance stuff, is it's boring. Finances are boring. I know that, and I'm a finance nerd, which is why I try to make all my finance content with a beer so that it's not as boring. It can be fun. It can be goofy. It doesn't have to be stiff and stale and boring. But it's super important that we get it right. Now, it's overwhelming. It's kind of I don't love building systems and processes. I kind of enjoy the chaos, which I know to scale a business, I need systems and processes, but I don't like to abide by them. I like to problem solve unique situations. I don't like to do the same thing over and over again. Now, that's me, which that makes me a weird finance person, because most finance people are very like OCD, like I got to do it this way, and then I put this shoe on this way, and I always tie it this way, and I put this leg in this pant first, and then I do this.
Whoa, I didn't consider anything like that before.
So like, it's like generally like finance people are very like systemy like that.
Yeah.
I'm just not. I kind of like me a little bit of chaos, but I'm very aware that you can't scale a business with chaos, right? Employees don't like chaos. I reserve the chaos and process dishonoring for me. And I tell employees that right when I hire them and train them, like, here's the deal. Here's our training system and process, and I need you guys to follow this. And I also need you to know that I am not going to follow that. If there's something here that's going to be broken, it's got to be run by me. I'm the rule breaker. I don't want you guys to break it. If you guys break it, that could get us all in trouble. I get to make the decision if we're going to break it. That's my job. But there are certain things where it's just like you can't violate it or it's going to cost you a lot of money. And it's not the system or the process necessarily, but it's just a way of operating. So you don't need I don't want to bore people to death with systems and processes here, but there is a way to set up your business, to set up how you interact with your business to make your life a hell of a lot easier. I call those Platta's 5 finance fundamentals. I think the last time I was on, we had like 12 different things, and I think these 5 are somewhere scattered in there. I don't know where they are in there. I have a notebook. That notebook isn't with me, but I think we ended up with 13 even. I think we had 12, and I maybe added a bonus one, a little baker's dozen in there. We'd have to go back and listen to that episode. But I still have that notebook with that page of like all the things we had written down. I'd have to go back and get it. It's somewhere back in Minnesota. But I have Platta's 5 finance fundamentals, and every time I get on the stage to talk, I do a little bit of the rant that I already did about what bookkeeping is and what it isn't, and why it's important to have a scorecard or scoreboard. And I don't care what the hell I'm talking about. I always talk about these 5 finance fundamentals for your Friday finances, because if you don't get these right, like, it's just hard to have a scoreboard in the first place. It's hard to know what's going on. So here we go. You ready?
Yeah.
5 of them. I might have to get up and look to get them in the right order, but I'm going to try to do it just by memory because I've presented enough times. The first of Platta's 5 finance fundamentals is that you have to separate business and personal. And you've gotten a lot better at that for yourself and for your businesses over the years. And this is something we talked about right away, which is like, in general, you can't have business stuff on personal and personal stuff on business, because how the hell are you going to read a scoreboard that's not accurate, right? It's not, if your personal stuff is mixed in with your business, how the hell are you going to know how the business is doing? Then it's just a hobby. But if it's your livelihood, if it's truly your business, then it sure as hell isn't a hobby. So you got to separate the business stuff from the personal stuff, or you won't have a clear picture. And again, back to the previous rant I went on, you signed up to play a business game, to play a math game. And so if you are the block of getting yourself good data because you're intermingling funds, you're causing yourself to not have a scoreboard to begin with. You signed up to play a math game and you're making it impossible to even play the game. You're handcuffing yourself. So if you're going to play this game, you should at least like not have your hands cuffed behind your back. You should use them. So number 1 of Platta's 5 finance fundamentals is make sure you have business and personal separated. Number 2 is if I'm presenting on stage with a beer, then I usually drop an F word when I do this one. But I won't. Maybe I will. I don't remember if I did last time, too, because I feel like I probably gave this one last time. But it's funnier when I have a picture up on the screen behind me, and I don't have the picture on the screen behind me. So I'll just lay it out like this. We're conditioned to be debt averse, meaning we pound our chest when we're like, I bought this truck with cash, right? Or I paid this thing with cash. And in a lot of cases in our business, there's nothing worse we could do. Debt, borrowing money, is a phenomenal tool in our business. Personally, in our personal life, debt doesn't do us any good. Now, as a business owner, it gets a little convoluted because we might borrow money personally to free money up to make business investments. But if you buy a truck cash in your business, let's say it's a $50,000 truck, all that you did was use up all the money that you needed for marketing and recruiting to actually grow your business, and you dumped it in a vehicle that sits in your driveway most of the time. And that vehicle doesn't make the business any money. You do. Or the customer does. Or the employee that would otherwise be driving that vehicle does. The vehicle itself is worth jack shit. The cash is the valuable thing. The investments are the people. The investments are the employees or the customers. The investment isn't the asset. The asset is useless without a customer and an employee. And so usually I reference Dave Ramsey in this because obviously Dave Ramsey is no debt, no debt, no debt, no debt. And personally, outside of my business, again, separate business and personal. Separate business and personal. Back to rule number 1. Personally, don't have debt. Your personal vehicle does not make you money, right? You going and getting groceries is not a form of an investment. Your business vehicle can make you money, and it's fine to have a loan for that because it should be out making you money every day. But if you don't have an employee and a customer for that vehicle to go do its thing, it doesn't make you any money. It just becomes a thing sitting in your driveway, costing you more money. So debt is fine if used correctly. Now, I'm not saying like go max out a bunch of credit cards. Credit card debt will alleviate the benefits of debt really quickly when you're dropping 20% interest on them. But even there, like, use a credit card in your business. Unless, I'll say, if you're one of those people that shouldn't have credit cards because you get out of control with free loans, maybe don't get a credit card. But for most of us, get a credit card, pay it down every month. Like, don't carry a balance on it, but it's like free money. It's a free 30, 45-day loan. It's a bunch of points. It's free money. Why wouldn't you take a free loan? Again, maybe it's not the right thing for you to do personally, but personally, your vehicle and your credit card and stuff doesn't generate a return because you're buying groceries. In your business, every time you're spending money on marketing stuff, on recruiting stuff, on an office person, on supplies, it's all geared towards making you money. And if you can't go do those things and get customers and employees, again, you're not going to make any money. It's okay to borrow money at one rate to go earn money at a higher rate. So throw out the Dave Ramsey in your business. Dave's awesome. He's not talking to small business owners that are making investments. Again, don't let debt get out of control, but don't pound on your chest when you bought a vehicle for cash. That's stupid. You missed the whole point. That's a bad investment. Marketing and recruiting is a way better investment than an asset. People make you money. Toys and equipment don't make you money unless you have the people for them. So that's number 2. Number 3 is kind of a weird one. Don't connect your CRM with your QuickBooks account. This is just a total nerdy bookkeeping one, but I'm so passionate about it that I include it in my 5 finance fundamentals. One of them is an accrual basis system, meaning it gauges when you have an obligation. One of them is a cash basis system, meaning it's looking at when money actually moves. Your CRM is accrual basis. Your CRM looks at when did you do the work for Mrs. Jones and when did you invoice it. When you invoice it, that's when you get, revenue in your CRM. Your QuickBooks is cash basis, meaning when did the money actually flow in. You hook your bank account up to your QuickBooks. Now, if you're doing over $25 million in revenue, you need to do what's called accrual basis accounting, like legally you need to. Then you need to go by your obligations, not just when the money flows. But if you're doing less than $25 million, there's probably a really good chance you should be doing cash basis bookkeeping. If you're a contractor and you're like building houses and your projects are, let's say, over $50,000 to $100,000, if you're doing remodeling and stuff like that, then accrual basis starts to make sense. But if you're doing projects under that amount, you should probably be cash basis. And you're just feeding transactions in from the bank account. When does money come in? When does money go out? Who you invoiced, when you invoice them is irrelevant. You're working, like the CRM manages all that. Who owes you money, what your accounts receivable is, all of that stuff is in Jobber, right? We don't need to put that in QuickBooks.
Jobber.
You
Yeah.
don't need
It's all in there.
You don't need that in QuickBooks.
Hey, you know what I just realized
You don't need the same
real
stuff
quick?
in 2 places.
I never actually do this on the video version of the podcast. If you want to get a free trial of Jobber and a huge discount with my exclusive link, go to getjobber.com/Kelfus.
It's as easy as that.
Back to the show.
But like, there's no value in having the same data in 2 places. Why duplicate it? And especially don't like that was a rhetorical why duplicate it. But now I'm going to say, don't duplicate it because it creates a shitload of work in your QuickBooks. And not that we're afraid of doing work, but why it doesn't add any value. So A, why create a bunch of work that doesn't add any value? B, if you don't know how to do it, which 98% of business owners I've run into don't know what to do when they dump all their CRM info into QuickBooks. It's not rocket science, but if you don't do it like at least daily or every other day, if you get behind on it, trying to figure out all the payments that pushed in from your CRM and which deposit they go with, that can be a freaking nightmare. Once that gets old, I was just helping a client she had 4 or 5 months of old deposits that she synced up her CRM. The CRM didn't tell her, and the CRM doesn't know what's going on in QuickBooks. The CRM didn't tell her, hey, by the way, when you sync this, here's what's going to happen, and here's all the things you're going to do. And so she did it wrong. She was using Blue Skies for bookkeeping at the time. Blue Skies tries to help, but it's not their thing, right? It's the CRM pushing the thing in, so then they're kind of in a weird spot. And so nothing good comes of it. It just creates a whole bunch of work. It creates a huge mess. I spent 5 hours with this gal over the last 3-4 weeks just trying to help like undo and redo everything. It's just such a waste of time. Guess how much value we added? 0. all of that work. I bet I spent 5 to 10 hours on it. Her and her husband, I bet, spent 10 to 20 hours on it. Thousands of dollars of our labor. Do you think her employees are better off? Do you think her customers are better off? No. It's just the most wasted work. So, not to say you can't sync a CRM with your QuickBooks. It just generally doesn't add value. It's a huge waste of time. Don't do it. If there's a way to avoid it, don't do it because you don't want to deal with the repercussions, and I promise you it won't add any value that you can't get from those two systems having the information that they have. Everything that you have is in those two systems, and you can get the information from them. You don't need to smash it all together. Number 4. What is number 4? Oh, I've got number 4. You ready? What? There's 2 more, and I just got to decide what order I want to do them in to make them most impactful. Let's do it this way. Number 4 is you're generally going to want to be taxed as an S-Corp. I say generally because when you pay taxes as a business owner, your taxes are really personal. Our businesses don't pay taxes unless we're a C-Corp, which very, very, very few people are. And the ones that are, the couple that I've talked to, there's been like 1 or 2 where I'm like, oh, it makes sense for you. But generally, it just doesn't make sense. Like that's for publicly traded companies normally. Our businesses do not pay taxes. The money flows from our business to us as a human being. We personally owe taxes. I'm talking income taxes. So I'll do like a quick crash course in how our taxes work. Generally, we set up an LLC. We're a business. We took Dan's advice of rule number 1 of separate business and personal. So we started an LLC. We have a separate bank account for that. And therefore, our LLC has its own set of books, and we keep personal and business stuff totally separate. We have separate bank accounts, separate credit cards. We're good to go. At the end of the year, that LLC makes, for sake of easy math, let's say that LLC makes $100,000 of income. That means, let's say it did $250,000 of revenue. We had $150,000 of labor and supplies and materials and marketing spend and all of our expenses. We have $100,000 left at the end of it. As a business owner, that $100,000, that doesn't get taxed at the business level. That $100,000 flows through to us, not physically. Like it's not like we take the $100,000. We might leave it all in the business. The IRS doesn't give a shit either way. They're going to tax us on all $100,000 of it. And because we're a business owner, we pay the highly coveted self-employment tax penalty, which means we're the employer and we're the employee. And employers pay payroll taxes and employees pay payroll taxes. We're lucky enough to be both of them. So we get to pay both of them. And they're both they're a little under 7.5%. And that phases out as the dollar amount gets bigger, but let's just call it 7.5%. So you're paying 7.5% as the employer and 7.5% as the employee. That's just you. This is before you even hire anybody. So out of that $100,000, that's 15%. That's $15,000. That's payroll taxes. That's not even your income taxes for making money. That's just you being an employee/employer of your business. So then you pay income taxes after that. Again, that $100,000, the IRS doesn't give a shit if you took it or not. It can all still be sitting in a business bank account. You still owe all the taxes on it. They don't care if you take it or not. So the reason to do that's if you're an LLC taxed as a sole proprietor, which is what you are if you just set up an LLC and then you leave it there. To be taxed as an S-Corp, you and or your CPA need to fill out Form 2553. You can go Google it right now. IRS Form 2553. I actually need to do this for my new bookkeeping business for the coming year. I didn't do it for 2023 because I just started this year, but I'll do it for 2024. Mm-hmm. When you're an S-Corp, and I'm going to clarify one thing which is you don't need to be an S-Corp. You just want to be taxed as an S-Corp. You could legally be an S-Corp. Then you just need like a board of directors and you need to keep meeting minutes and a whole bunch of other stuff. But you can still be an LLC and just opt to be taxed as an S-Corp. Mm-hmm. So you get the best of both worlds. The reason why you want to be taxed as an S-Corp is it allows you to pay yourself a wage. So out of that $100,000, you can actually take a W-2 wage, and your payroll taxes are limited to that wage. So instead of having to pay 15% payroll taxes on $100,000, you still have to pay 15% payroll taxes, but now you can pay it on $50,000 or whatever air quotes reasonable wage would be. And it's got to be reasonable, meaning like roughly what you'd have to pay somebody else that would be doing that same job that you're doing in the company. And so it's a mechanism to save you a bunch of money on payroll taxes. So even in that simple mathematical case, if it was $100,000 of net income and your reasonable wage was $50,000, well, 15% of $50,000 is $7,500. Like, I don't know. Do you want $7,500, or would you rather pay it to the government?
Mm-hmm.
I'll take it. I'll take $7,500. Now, if you're taxed as an S corp, now you have a separate tax return to file. Like as a business, the business now needs to file a tax return. So you're probably paying $1,000 to a CPA to do that. And if you didn't have a payroll system already set up, let's say you're using Gusto, that's what I use. It's like $40 a month plus $6 per employee. So you're out $50 a month for a payroll system. So let's even round it up and say you're out $2,000 to get the tax return done and have a payroll system. You're still better off by $5,500. And it's literally just like money that you didn't pay the IRS legally, which I think as small business owners, I haven't met a small business owner that's like, man, I would just love to pay more taxes. That sounds good. So if you can go save $5,000 in payroll taxes, hell yeah, go save it. So that's the reason to be taxed as an S corp. It's not you don't save any money on income taxes. You would actually end up paying a little more in income taxes because your income would be higher because you paid less in payroll taxes. But it's purely a payroll tax saving mechanism. And the cutoff, there's no cutoff, but I'd say where it starts to get interesting, where you should really be thinking about it, is if the net income in your business is like starting to hit 50,000-ish, like 30 to 50,000 range. If your net income, revenue minus all expenses, is approaching 50,000, you should be thinking about being taxed as an S corp. We're recording this in late October, so it'd be hard to do now, but you can do it for 2024. And the deadline to get it done is I think March 15th. So if you didn't do it for 2023, you sure as heck should be doing it for 2024. If you think, now you're kind of doing it proactively, right? If you think in 2024 you're going to have net income, somewhere in the $30,000 to $50,000 range or more, you should for sure be taxed as an S corp. The Platta's fifth finance fundamental is an offshoot of that. One of the things that I like about having clients that are taxed as an S corp, and this is just me being a nerdy finance CFO type of person, is if I'm going to look at your QuickBooks account and say, hey, Keith, here's how you're doing, and I look at it and you don't have a wage in there, your business is going to look really profitable because you're free. And I would argue you should be the most expensive person in your business. But if you don't take a paycheck and you just take distributions from your business bank account to your personal bank account, that doesn't hit your profit and loss statement. That just hits your balance sheet as equity going out the door. That's like when a big corporation pays a dividend. It's money going to the owner. That's not money going to the employees. And I would argue for most small business owners, they're definitely an employee in their business. They're definitely doing work, and workers get paychecks. So part of the reason to be taxed as an S corp is to hit on my fifth bullet point, which I'll make here in a second. But when you take a wage, you become part of your profit and loss. And all of a sudden we can see what you really cost the business, which as you grow the business, then it gets really important that you know how much you cost, because you're probably going to have to hire somebody else to do your job. If you're a technician, you're going to hire somebody else to do that. Then you're going to become a salesperson. And eventually you're going to hire somebody else to do that. Then you're going to become a CEO and a COO. And if you're really good, you're going to hire somebody someday to do that, and you're going to be sitting on a beach drinking Mai Tais. I don't even know what the hell Mai Tai is, but it sounds good. Do you know what's in a Mai Tai?
I don't.
We'll look it up later. Sounds delicious, though. Or Busch Lights with me on the beach. So, point being is, you need to know how much you cost the business in order for you to replace yourself. And so many small, we're going to get into this when we have our purgatory discussion. So many people start growing the business and don't take a wage. They just take distributions. And then they think, oh man, I have this business making a shitload of money. I'm so profitable. And then they hire their first technician. And that technician gets the paycheck for going out and doing the work. And all of a sudden, there's no money left for the business owner.
Jill's office provides friendly, professional receptionists for small business owners just like you. We can help answer your calls, and we can even schedule estimates and jobs for you. Try Jill's office today and get a $25 discount when you say Untrapped. Just go to jillsoffice.com.
And there's this stark realization for the business owner of, oh shit, my business doesn't actually make money. It just made a wage. And now that guy gets the wage, and I'm the business owner, and there's no money left for me because now he's the one making the wage, and I got to make sure he has work to do, right? So I'm going to send him out to do the work, but the business doesn't actually make any money. It just makes a paycheck for one dude. I used to be that dude. I used to be the one getting the paycheck, and now
you're saying that's with the owner getting out of the field.
The owner's out of the field.
So he's not producing the work being done at double the speed now to make double the money to pay him and the employee.
Yep.
So when the quote-unquote owner-operator gets quote-unquote out of the field, that grand a week he used to pay himself, now it's going to
the other dude now.
Is going to the other dude, and you're like, oh, shoot.
Yeah, that's all the money the business was making. It wasn't making a profit. It was making a wage for the technician. And now you're not the technician getting the wage, and there's no money left in the business.
Reasonably, if there is only one crew, it's going to be a little bit of money, but you'd make a little bit more money the more you grow. So how many crews or how many people until that owner would be making back the amount of money?
You're going to have to listen to the podcast on the purgatories of scaling. The point is, we'll get to that because there isn't a specific level. It keeps changing because there's ebbs and flows of that. There's different levels where you need to hire different people, and there's periods of great profit and periods of really shitty profit. And that's not just when you hire like the first two technicians, first one or two. It keeps happening again and again and again the entire way through your business. There's peaks and valleys.
Mm-hmm. Because if there comes a point where you have to hire somebody really competent in the office or or an operations manager, somebody to boom, that $65,000 you're going to have to pay them takes your super healthy profit business is stuck because that's a purgatory of scaling.
Purgatory.
And now you got to make that higher, so then you got to grow your way through that.
Yep.
What was the fifth P again?
The fifth one is all of that. The point of that is you need to understand when you're the owner and when you're the operator. So often we define ourselves as like with a badge of honor of I'm an owner-operator. Those are two different things. Owners don't have jobs. Owners don't get paychecks. Do you own any stock, Keith?
Yes.
Stock market?
Yes.
What do you own?
Tesla, Apple.
All right, Tesla. When was who's the Tesla dude?
Elon.
When was the last time Elon called and was like, "Yo, Keith, I need you down at this"? He's never called you.
Mm-mm.
You've never showed up late to work for Tesla?
Mm-mm.
Have you ever gotten a paycheck from Tesla?
No.
Exactly, because you don't have a job there. You're just an owner. You own stock in Tesla. You're an owner. You don't. They've never called you to show up at the warehouse to move a box to wrench on this, because owners don't have jobs. Owners don't get paychecks. Owners are investors. They put capital to work in a business, and the business takes the capital and does businessy stuff with it. Now, we're all owners generally of the business that we operate, but we like smash being an owner together with being an operator. Day to day, we're just an operator. We're a technician. We're a salesperson. We're a general manager. We're a COO. We're a CEO, right? We're everything. As we scale the business, we slowly hire some of those roles out. we're still an owner, right? The owner gets the profit, but we're also doing a job. Us doing the job, we need to get paid for the job that we're doing. Because for us to build a scalable, profitable business, we need to make sure that our business can afford to pay somebody to do that job. If we build a business that literally can't afford to pay somebody to do that job and make the owner money, eventually we're going to hire somebody to do all the jobs. We might build, I've seen this happen before, might build a $3 million company. Sounds great, right? Well, not if you build it to just make enough money to pay everybody's wages and there's no money left for the owner. Because at $3 million, you might hire a CEO. Now what? Now there's no money left for you if you didn't build a profitable enough business that can make a profit and pay everybody's wages. So it's super important. And the reason why I stress right at the beginning, separate business and personal, this all kind of builds on itself. The reason to do the S-Corp thing is because you need to know what you cost the business, because someday you're going to hire somebody else to do your job. And you might take a different job in the company, but that's only going to happen for so long until you exit the company. Now, you can still own it even if you don't work in it, right? You own Tesla and you do not work in it, because working at a job and owning a business are two separate things. And our small business is no different. We can own it and we can have a job in it, and we usually do both for a period of time, but it's important that us as an operator gets a paycheck for doing that job. Us as an owner gets to decide what to do with the profit. But for us to be able to decide what to do for the profit, there needs to be some damn profit. So we need to build a business that can make a profit after it pays all the employees, all the supplies, all the marketing, all the recruiting, all the infrastructure, whatever it is. There also needs to be profit left so that someday we can be sitting on that beach drinking Busch Lights and the business is still sending us a dividend check once a quarter or whenever it does. So the fifth thing of Platta's 5 finance fundamentals is know when you're the owner and when you're an investor and when you're an operator. The owner and investor is just making investment decisions. Are you going to put more money into this business that you also operate? Or are you going to go buy a boat? Or are you going to go on vacation with your family? Or are you going to invest in another business? Right? Like I have best damn bookkeeping, but I also am an investor in Higher Lead Chill. I don't have a job here. In Higher Lead Chill, I don't get a paycheck. I'm just an investor. I'm a mentor. I'm a coach. I don't get a paycheck. If we distribute money, I'd get some. But I don't show up to work there. I talk to Sean, see how he's doing, see how I can help. Over time, I probably need to check in with him less. At some point, he'll probably buy some shares in it and be an owner in it too. But I'm just an investor. I'm just owning Tesla stock. I'm a little closer to it, and I can influence it a little bit more. Best damn bookkeeping, I own 100% of, but I sure as hell have a job there. Right? I am the operator. I'm the owner and the operator. I'm not an owner-operator. I'm the owner and the operator.
So can you say the 5 real quick again? Just boom, 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 boom.
Boopity boop boop. Number 1, separate business and personal.
Mm-hmm.
Number 2, don't be afraid to use debt wisely. Debt in your personal life, debt in your business life are two totally different things. So in your business life, don't be afraid to use debt wisely. Number 3, for the love of God, don't sync your CRM with your QuickBooks. Number 4, what was number 4? Number 4 was you probably want to be taxed as an S-Corp. Sorry, I have a hard time like keeping my pinky down doing the 4th thing. I'm going to just do this.
Oh, yeah,
it's hard to do, isn't it?
Yeah.
Here.
You're
No, so
I can do it with this hand.
Yeah, I can do it with my
But
thumb.
I can't do it with my left hand. I can keep all my fingers open and my pinky totally down.
I can't.
But with
I'm
my
not
right
close.
hand, I cannot put my pinky all the way down, and it pulls my other.
Pulls your other one down.
That's crazy. All right, now what was number 5?
The things we learned. So number 4 was you probably want to be taxed as an S-Corp. That one, verify with your CPA because it gets into personal finance stuff too.
Mm-hmm.
And number 5 is kind of an offshoot of that, which is you need to know when you're an owner, know when you're an operator. Part of it is doing the S-Corp thing and taking a paycheck so you know when you're operating the business and what it's worth, and also understanding that you're just an investor. You could invest in the business you run. You can also invest in any other business you want too.
One quick tip, not a tip, I'm sorry. I have a friend who's got a tree service business, and that type of business requires most of the time, until it's like a totally different animal, the owner, who's the expert tree guy, to be there.
Oh yeah, that one's an intense business.
Yeah, and it's a safety. It just so it's usually the owner operator mindset permeates that business, and the whole goal of that is to get as much fucking equipment as you can, to like heavy duty ass equipment, and you can go really, really, really far as the owner operator. But then the second you try to get off that job site and leave it, I'm not qualified to talk past that point. But
Can we talk about this for a little bit though? Because I got some thoughts.
Okay.
One of the challenges is with that, like that's not the only industry that has that, but that is an extreme case, because that the dingo is I don't know, like pushing $100,000. The crane truck for those situations are like $100,000 if it's used, right? The stump grinder is whatever, and a lot of times like they rent the bigger piece of equipment if you're an owner operator. But if you ever watch a manufacturing business, like a good manufacturer, if they have a piece of equipment, that thing is running 80% of the time. It has to be. In order for them to be profitable, usually it's like the 80-20 rule is the 80-20 rule for a reason. It's running 80% of the time, which is why a lot of manufacturing companies run a first shift and a second shift, and third shift is operating to wind the day down, and the back half of it is like sanitation or maintenance or whatever it is. We throw that out the door a lot of times in the service industry, but like to our detriment. When we have big capital assets like that, we should be doing the same thing. That thing needs to be running like 80% of the time. And so sometimes the challenges that those businesses have are they have all this equipment, and yeah, they can go pretty far, but they're super strapped with expensive assets. And those assets generally aren't operating all the time. And so their cash flow can struggle as a result of it. Now, because they can usually have a pretty big average job size, they can still bring in quite a bit of dough, but they have a hard time scaling, because how the hell are you going to hire a guy that can use that crane truck, that can run that stump grinder, that can run the dingo thing, that can climb that tree, right? Like, you're trying to hire somebody that otherwise just might as well be a business owner. If they could do all that stuff, they would just run their own damn business, right? So now,
you're speaking some truth right now.
Dude, in that tree space, if you look at it, though, it tends to be a bunch of solopreneurs and a helper, right? It's the solopreneur that can go do everything, and then he'll hire a helper to do, like, the onesie-twosie stuff that's easier to train.
Yeah.
Or it's a $30 million business. There's a lot of $10 to $50 million tree care and tree removal businesses that are massive, because they had enough to like scale those assets, right? In general, and this again, the tree care industry is an extreme case of this, but this happens in window cleaning and pressure washing, right? There's a lot of dudes that will do window cleaning, and then they do pressure washing, and then they do some, one of the funny things we tried to do was driveway sealing. Because we had like 2 months of slow time in the summer, like August and September was always slow for us. And we're like, we got downtime. We should do driveway sealing, right? Such a when you're smaller, you branch out into everything. And you can when it's like you and a helper. The problem is it causes you to buy all these assets that you can't possibly use all the time. And so it sucks all your cash flow dry, and you end up just being a stockyard of toys that you're not using all the time. A way smarter decision would be like, we're going to be the stump grinding kings of the North, and all we're going to do is stump grind, and I'm going to scale the shit out of stump grinding, and anytime any other tree care business needs a stump ground, we're going to be so good at it, and that's the only piece of equipment we're going to have, and we're going to have one of them, and then we're going to have two of them, and then 3, 4, and I can train the dummiest dummies to grind stumps. I can't train them to run the crane truck and do this and know how to cut that tree and do this and that, but I know I can train. I'm just talking on my ass here because I've never ground a stump in my life. But my point being is I could train that. If all I did was that, I could probably grow $1 million business in a couple of years just doing that, right?
Wow.
But if I tried to do all the things, sure, I could do all the things.
Dude, he ain't never going to do it. My buddy had a genius idea for a business.
What's that?
he ain't never going to do it, so I'm just going to say it because he done told me this shit a couple times 5, 6, 7 years ago.
Yeah, it's over. It's over.
Yeah. To be a service, my right foot's twitching, telling me to shut my mouth.
That's how you know?
Yeah, I've conditioned myself through neurolinguistic programming when to shut the hell up. Anyway.
So I shouldn't egg you on to tell us? Well,
okay, it's a Johnny on the spot. It's a basically for landscape and tree services and stuff that I'll just shut up right there.
But I think that's a thing,
you
right?
You can build relationships with hundreds of companies.
Yeah.
And it kind of like, I'll just stop. All right, keep going.
Yeah. But I mean, that's a real thing because so many of us get into it. And when we try to build it based on our skill set, we can do a lot of things. That's why we're a small business owner, right? We like it. Again, I don't like systems and processes. I like jumping around and doing this and doing that and breaking this and solving this problem. That's not scalable. How many people can go do that? Very few, right? So if you're in the tree care industry, you're going to have a really hard time finding the guy that can like climb that tree and then run that piece of equipment and then do this, and you're going to pay him $20 an hour. Bullshit. He's just going to go start his own. If he's that good, he's going to go start his own company. Mm. But you could hire some rock climbing guys to go do your tree work, and you could hire somebody else to go do your stump grinding, right? And so part of our challenge as we scale a business like that, especially a capital-intensive business, and we're just picking on tree care right now because we got into it, but it's such a capital-intensive business for all these pieces of equipment, and so that's why you see this huge gap between, there's some massive companies in that space, like some massive companies in that space. You can get huge in that space, and then the assets aren't really that heavy on your balance sheet, but it's really hard to be an average size company in that space and do everything. You don't have the scale to do it. You're better off like picking the things in that space that you're going to be really good at. And I'm just talking about this from my experience in maid service and window cleaning and pressure washing. We spread ourselves thin. Like I said, we tried to do blacktop sealing. Stupid. We tried to have businesses across the country doing less than $1 million. Stupid. Like, we spread ourselves thin in so many dumbass ways. In hindsight, if we just literally would have been like, all we're going to do is clean windows, and we're only going to do it in Minneapolis, and we're only going to do these size of houses, and that's it, I bet we'd have a $10 million window cleaning business right now. Instead, we had $3 million worth of problems spread out across 8 locations across the country. It's like, tree care is no different. We, as a business owner, when it's just us and we're small, we have the luxury of we can do a lot of things. As we start scaling it, we start to realize like, oh shit, I can't hire a person to do all that. I can't hire an office person to know that stump grinding happens like this. But when we do this type of tree, we have to do it this way. And that type of tree might have this disease. And so here's the thing that you need to know, right?
I got a friend who's a super high level arborist, and he has to sit down himself and personally write up these quotes.
I bet.
Because he's describing, this Colorado spruce has cytosper canker, and it has, rhizophyra or needle cast disease, or this. He's going on and on. He's talking about the remediation, and then he's talking about the girdled root, and basically how we're going to have to do a tree injection with this amount of this. And it's like, so he has to charge. I don't know what it is now, but it's probably like a $2,200 minimum to be able to even step foot on a job site.
Yeah.
Because of all that stuff. And there's stuff I just don't want to say. I will say this. So being a owner, operator, or solopreneur, whatever you call it, I've done tree trimming, shaping, thinning, pruning, sculpting, elevating. There's people that would say, you should never sculpt a tree. You're gonna go. We've done I've probably done 1,500 removals and probably trimmed 10,000 trees, and I've learned a lot of stuff, and I've been around. It's stuff I don't share on YouTube, so I'm not an expert. We've fucking removed some monster trees, bro. Stuff that with cranes, spider lifts, 100-footers, bro. And what I learned was I don't do any of that shit anymore. We just do ornamental tree trimming. Small little trees you can reach with a step ladder and shit that the customer can't reach, that I can charge $250 or $350 per tree.
Yep.
And then we can get in and out within a few hours and do these trees because it's simple and it's predictable. It's not crazy dangerous. It doesn't require some high level of workers' comp. And then I can train other guys to come in and prune them and do the stuff. And, and that way I'm not handcuffed to my service business because I don't want to grow a monster tree company. Some dudes might, but they think that sorry, you'll talk about the purgatories of scaling, bro. What I wanted to say and narrow it down to
we're just setting it up. We're just setting it all up.
If you're going to do something, go after something you're passionate about in your heart, and you can see yourself doing this 10 years from now, even if you change the role in the business. Do what you're passionate about, because if you're just chasing money, or you see some other guy who's making a bunch of money doing big tree work and he's got these big trucks and a lift and a boom, he must be doing so good. Well, make sure that's really what you actually want to do.
Yep.
Go mess around with that for a little bit before you go, because you might realize you hate it, or you might realize you love it. But
dude, we're going to get into that big time on the purgatories of scaling thing, but to set that up before we get into that, we start in the service industry generally because we're like, oh, I'm doing a thing. I like doing this thing. I'm good at doing this thing. People pay me to do this thing. I'll start a business doing this thing. I don't care. Like, I mowed lawns right through like middle school and high school. I've run a window cleaning business. I've run a maid service business. I've started from scratch. I am a bookkeeper technician. Like, I don't dislike doing that. I'll sit and screw around in QuickBooks. Like, at some point I'll get bored of it. I can't do it all day, every single day, forever. But I will, like, I enjoy that sort of work. I like being outside working with my hands. I like working on people's finances, all that sort of thing. What happens is that's what enters us into a service business. And bookkeeping is just a service business. I'm just not going to people's houses to do it, right, or to their business to do it. I just do it digitally. Recruiting is the same way. Marketing is the same way. Landscaping is the same way. They're all service businesses. What happens is we're good at a thing. We start doing it. We grow a business doing it. Eventually, we start hiring people to help us. And we used to be a landscaper. Now we're a team lead. Now we're a manager. Eventually, we're a general manager. Eventually, we're a salesperson. Some point, we're a COO. And some point, we're a CEO. And all those jobs are totally different. And the skill set of being a good CEO has nothing to do with bookkeeping, has nothing to do with landscaping, has nothing to do with window cleaning, whatever the hell our business is that we got into. If we're going to scale it, the skill set that got us started in our business is almost useless.
Wow.
And so we'll talk about that when we get into the purgatories, but as you scale a business, like, make sure the business you're growing has a job that you want in it. Right? The business you started had a job that you wanted. Maybe you don't want that job forever, and so you've got your sights set on something different. But I think that's a staple of that whole conversation, is just your job changes immensely as you grow a business. And it has to, for the sake of the business. Now, the cool thing is, you grow a business, there's a whole lot of jobs in it. So if you like being on the truck, you don't have to get off the truck. You can hire all the office stuff. You could hire a CEO, and you can still be out on the truck. One of my favorite podcasts, I find myself listening to podcasts since I'm a show host. When I listen to a podcast, I'm like listening to be a better podcaster and a show host. Like, I don't listen to their content as much. I'm just like, oh, how do they introduce this guest? How do they make this boring topic entertaining? One of my favorite ones, not that it's a boring topic to me, but might be to others, is the Meat Eater podcast with Steve Rinella. Outdoorsy podcast. They have a lot of scientists on and different state agencies on and stuff like that. Every once in a while, they'll tell a hunting or fishing story. But one of the things that they do on there all the time is they'll bring, let me back up. They bring a guest on, right? Steve Rinella is the show host. Steve started it. Like, it's his business. He's not the CEO of it. They hired a CEO so that he can just be the show host. He hosts when they do like a live hunting episode, and they'll bring filmers out and whatever, and they'll film an adventure and a hunt or whatever. And he's the host of the podcast, and he brings in other talent, but he's not the CEO of that business, right? He realized his skill set isn't to be the CEO of a business. Being a CEO is boring as hell. It's dry. It's lame.
Oh my God!
The
You just
shit
gave me the biggest epiphany ever. Keep going, bro.
Yeah, but just like the shit you deal with when you're a CEO is not fun. It's not day-to-day problem-solving stuff. It's like legal, bureaucratic nonsense the bigger your business gets. So is that what you want to do? Like, not to say stop growing a business because you don't want to be a CEO, but if you like being out in the field in your business, don't hire somebody else to be out in the field and you go do sales. If you like to be out in the field, go hire somebody else to go do sales. Go hire somebody else to answer the phone. Go hire somebody else to be the CEO, and you do that's the beauty of owning the damn business that you operate. You get to own it. You get the benefit of being an owner. You also get to choose which job in there you like, and it doesn't have to be the CEO role. Like, being a CEO is boring as hell. That's not a fun job. It's lame. It's dull. It's lonely. Maybe you want to do that. Maybe you don't, but it's your business, so you get to choose which job you want.
Wow. Choose the role that you play in your business and then hire the other roles.
Who, not how.
Empower by Dan Sullivan.
Yeah.
All right, what else for this podcast? You got anything else?
I think we covered it. We got the 5 financial fundamentals in there. We got the what a bookkeeper does. We got best damn bookkeeping. We'll talk. We got to do future episodes here. We got to talk about group interviews, and that's life changing. If you're going to hire anybody ever, you have to listen to that. That is going to be its own episode because
you know what I'm going to do. I'm going to do something special for you guys. I'm going to put out these 2 episodes back to back.
Bam.
Yeah, it's going to be part 1 and part 2, or very, very close to each other. So if you're on Apple or Spotify and you're scrolling on the Untrapped podcast, then check this out. Also, if you would like to have this for your podcast, you can have all rights to it as well. By chance, if you want any of the content and you want to post it on your stuff.
Yeah. Spread the love.
Absolutely, because I want everybody to hear this. So we're going to do that tomorrow. Dan's in town from Minnesota. We're going to go get some dinner, hang out, talk business, and we're going to be right back, and we're going to do this again. Bro.
Yeah, dude. We're just getting started, baby.
When you talk, man, there's things that pop up that I want to say, and if I just relax and you address them, you know how to come to a close and wrap up and put the bow tie on it. You know how to, like, when you open loops, you're aware of the loop that you open, and you know how to conversationally close it and get back and keep the main thing, and the point.
I always wonder, though.
You're good, bro.
Like, you know how you hear other people talk and you know they said something they didn't mean to say? Like, they said a word that was different, that didn't make any sense in, like, the phrase that they said, and you know that they meant a different word, but their brain just spit out the wrong word.
Okay.
You know what I'm talking about?
I do.
Right? And then you're like, that causes you to reflect, to think, I wonder how often I do that. Because that person had no idea of what they actually said. And I could call them out for it and be like, you said this, but did you mean that? And they would argue till their death unless you proved it to them that they said what they thought they said versus what they actually said. Right?
Well, I have selective hearing. My wife will tell me some shit, and I'm like, you didn't. She's like, I swear to God. And then,
well, naturally, that's called being married.
Yeah, I'm sorry. yeah.
But I always wonder. So, like, I know I talk to people and they say a thing and I know it's not what they meant and they meant to say this, and like if you addressed it with them, they'd be like, that's not what I said. And I'd be like, well, I wasn't filming it, but that's what you said. I know, but I know it's not what you meant.
There's a book, I said this, you heard this, or you said this, I heard that.
Yeah.
Dude, if somebody is speaking on a podcast or on a stage or some platform and they say one little weird thing or anything, I'm that dude. If I don't care if it's a 4-day long event, and then and the sun went up and down and thousands of people and things and blah blah blah, and people had lunch and went to bed and woke up and all different things, and it rained, and 4 days later, if there's a long ass line and we get to meet that guy, you know, it's been 96 hours. I will say, hey, what did you mean way back at 27 seconds when that one little tiny microscopic thing came out of your mouth and you said, oh, never mind that one thing. What did you mean?
Yeah, what was that?
Dude, that'll stick like a splinter.
Yeah, I gotta know.
Yeah.
I don't know what that was.
And it's so becoming aware of stuff like that and being conscious about what you talk about in the seeding and threading.
Yeah.
So sometimes you could say something called, it's proprietary language. So you say Dan's 5 what?
5 finance fundamentals.
Okay, 5 finance fundamentals, and we're going to get to that in a little bit. People are like, well, I got to know what they are.
Yeah.
Because you don't hear people talk like that often. And you must have put a lot of thought in this. You are the home service CFO. This is your specialty and your obsession, and you make it fun. So if you've come up with 5 finance fundamentals, we got to know what they are. Oh, my God.
And when you get to 4, you're like, well, now I got to know what the 5th one is.
Yes.
You can't just stop at 4.
And you deliver on them, and you know what they are. So it's awesome, man.
So, but now I got to close that loop because, like you said, I started a loop and I got to close it.
Okay.
So you were talking about closed loops, and I'm well aware that I'm a very tangential speaker. Just like I don't like systems and processes. When I do my podcast, no script. I mean, kind of like this. Like, I got some thoughts.
One other thing. You come with all the points, but in between the main points, you'll loosen and we'll just kind of banter and shoot the shit and then get right back on. It's like, it feels scripted almost at the point of your awareness. All right, keep going.
It's in here, right? Which like our businesses often are too.
Yeah.
Right? Even if we don't have it all documented, like we know how it's supposed to be. It's all right up in here, right? This tribal knowledge thing we got going on. But just like you, again, like I observe people that say a thing, and I know that's not what they meant, but I also know that if I addressed it, they'd be like, that's not what I said. I also am well aware that sometimes I must open loops that I don't close. And I'm like, just like I know there's got to be times where I probably said something different than what I meant to say, but nobody told me, and so I'm unaware of it, right? Like I watch other people do it. It must happen to me. I can't be flawless. They don't know what happened to them. So it's got to happen to me too.
Yeah.
I just would never know it unless you told me, like, Dan, that's like, I think what you meant was this, but what you said was this. And then I'd be like, bullshit, Keith, prove it. That's not what I said. And then you'd be like, I can prove it because I got the technology here. And here, let's.
No, you've been very good about what loops you open and close. And that's why I said my right foot's twitching, because I've conditioned myself a lot more than I used to be careful of, if I think of something, like I get excited and I think about this other thing.
Oh, yeah.
Shut up, Keith. Just stay on the main thing. Because I was on a panel at the Equip Expo last week with Brian Fullerton and Naylor Taliaferro and all these guys, and they know when Kelfus starts talking, you got to keep him on a tight leash, bro.
Yeah.
Because I'll go off into neuro-linguistic programming and hypnotherapy, and some people in the audience like that shit when I talk like that.
Yeah.
But there's a lot of other people that are like, all right, dude.
Here he goes.
And so there's some part of my ego. So I've learned this when you're talking to customers. Just make it all about them.
Mm-hmm.
And how quick can we make this customer super happy for real so we can get the check and move on to the next customer? Because everything else beyond that is just, it's not really value added if it's not making them happy. Nobody cares, you know?
Yep. Nobody cares.
Bro.
They just want the experience.
How can everybody find you again right now?
Go check out. Actually, by the time this podcast launches, I got to get my website up. I've been so busy helping clients, I haven't built my new website. But it will be, and the URL already exists, bestdamnbookkeeping.com. Dam spelled D-A-M-N. But I also own the domain for Best Dan Bookkeeping in case you type that in. Or if you don't like the swears, go with Best Dan Bookkeeping. Or you can go to calendly.com/Best Dan Bookkeeping too, and that just goes right to my schedule. You can book time with me to do a demo, nerd out for 15 minutes on your business, whatever you want to do.
Calendly.com/bestdamnbookkeeping.
Yeah.
To book
some time, nerd out on your business.
If you are looking seriously to get help with your bookkeeping and to sign up as a client, and you want to know how this can serve your business, right?
Yeah, there's a link on there for like an hour-long demo. And people like bypass that and they try to book 15 minutes, and I'm just like, no, you got to book the hour. A, you might be able to tell, but I talk a lot. B, your business is more complex than you think. And if we're going to get it right, we got to spend some time on it. There's no shortcut. There's things I need to know about you, things you need to know about me and how we do things. And so we're not dicking around. We're going to dive in. It's important.
Some people might be like, but before I do that, I don't want to waste your time, Dan. How much is bookkeeping per month? You know, they said they can have some type of, they don't say, how much is bookkeeping? It's how much is this thing Like, what is the range of bookkeeping costs?
The answer is always, it depends. Because I price based on transactions and number of bank accounts. Like, how much activity do you have going on? I've had a guy doing $1 million in revenue, and his price was $160 a month. I had somebody doing $300,000 in revenue, and their price was over $400 a month.
Mm-hmm.
They were just super inefficient. They were swiping a card for every $2 on the planet. I don't know what they were doing. But so
my bookkeeping bill is pretty high because I have so many bank accounts and so much shit going on and so many different
the more complex it is, the more work there is to do.
Yeah.
And so it's not like a one size fits all. Like the process, I'll say there's a process, but every business is unique, right? So the bookkeeping has to be unique for that business. We have ways to organize it, but the pricing is going to address the uniquenesses of that business and what it takes to do a good job for that business. I will say it starts at $147 a month, and it just goes up in $25 increments from there based on how complex it is. And part of the reason why I spend
there's an initial onboarding fee to sort through all of it and get it all.
So there's a $500 setup fee to like get it all built out the right way and do the chart of account stuff, the right organization, the balance sheet stuff. If there's, I will say, if somebody says, "Hey, I heard you on Keith's podcast," they always get half off, just for the Kelfus love. So it's like $247 setup fee for them. There might be an onboarding, like a historical fee. There usually is, because most people that come to me come and they're like, "My books are a disaster," and most of the time they're not as bad as they think. But like I'm working on one right now that we're going back to the start of 2022. It's like there's a lot of historical work. So whenever we're doing historical stuff, I just bill it hourly. I bill it at $87 an hour. I mean, it's hilariously just like window cleaning or maid service or lawn care or landscaping. Like the rates are about the same. Like the business model is hilariously similar. So I bill that time at $87 an hour for like specialized technician labor to go back in time, clean stuff up, correct stuff, whatever it needs. And again, it's like, every business is different. How far back do we need to go? How screwed up do we need to undo stuff, redo stuff, all that? So we do hourly stuff until it's caught up, cleaned up, reconciled. You could eat off of it, type of cleaned up balance sheet, P&L. Then we send our first P&L analysis. And this is a new thing that I'm doing in the new business. When we send a P&L report, we send an analysis with it. So it's not just like here's your P&L, which if you're not used to looking at a P&L, you're just like, what is I don't know how to read this scoreboard, right? Like there's a financial way that it's laid out. And if it's the first one you've ever seen, you're like, and so, it's like a bunch of words you don't recognize and a bunch of numbers in a weird organization. And you tend to look at the top line to see like how much money came in and the bottom line to see how much money is left. And so now when we send it, we send like a 2 to 5 minute video talking about here's what's going on in this and here's what's working and here's what's not working and here's why it says what it says. So a little bit of flavor for a little context, little help to the business owner, little finance nuggets.
Thank you. In my program, the Business Money, it was the Business Money Basics, and now we've upgraded it to Business Money Blueprint. You actually came in for like an hour, and it's my private course.
Yeah.
And you showed how to read a P&L statement and all this stuff. If you guys ever see that program, I don't even think you can get it on my website right now. It's special. Grab it. If you don't hire Dan, go learn that, and then so it'll give you the confidence so then you can go hire Dan. You know what I'm saying? Dan is the man. I totally trust him with my books and bookkeeping and financial data. He has impacted my entire life to the point where I was in tears. That's how much Dan means to me when it comes to, because having my act together financially, and probably the same for you, is one of the most critical things, at least breathing air on this planet, so you can be a provider and be a caretaker. So thanks so much for being on my show, Dan. We'll be back again tomorrow with we
got to do the group interview and the purgatories of scaling. So we got like 2 deep topics tomorrow.
And if you're watching this on the video, I'll put that link to that video below here. And if you're watching that video, I'll put the link to this video below there.
But bam, circular.
Thanks, Dan. Thanks for being on my show, buddy.
Hell yeah,
Thank
Keith.
you, everybody, for watching the Untrapped podcast. See you on the next show. Peace. Hey, I hope you liked the show. And if you like the Untrapped podcast and you get value from it,
can you please take a minute and go over to Spotify and leave it a well-worded positive 5-star review? It helps boost the rankings on Spotify so the show can get to more people. Therefore, these messages can get out to more people and inspire more people so then they can go out and start their small businesses and crush it and get to the next level. It's a huge deal. All right, I'll see you in the next show.